Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. Joining me in studio, senior economist Tracy Shuchart.
Good morning, all. Happy ADP Tuesday, or happy non-farm Tuesday and ADP.
Macro strategist Craig Shapiro.
Morning.
And on the big screen, my guy. He doesn't have his glasses today. I almost didn't recognize him. He's always changing.
I don't know what's with this beard going on.
It's always changing.
What's with this beard?
I know he's got a beard. My man, senior market strategist Jimmy Cagnina. Good morning, Jimmy.
Good morning, Naples. I hate to admit it, but I misplaced my glasses this morning, so we're going naked on the face here with no glasses.
And good morning, Chad. Hopefully everyone is doing well on this Tuesday morning, December 16th. As Shai said, we have data today, which is, it's old data, but it's data.
Right. So we'll get partial October non-farm and all of November data. Obviously, we only have partial because everybody was furloughed, and so there was nobody there to collect the data. So we'll get that, and we'll also get some delayed retail sales data as well.
Got it. So some market moving stuff overnight. Saw that little bit of a washout overnight initially, and equity indexes have since come back to relatively flat coming into the data. Bond market again showing some stability, not selling off. Dollar relatively flat to down against most of the currencies this morning, so that'll be something that we'll talk about. And metals paused just a little bit, but nonetheless still going to be a story. And crude oil continues to just chip away now in the 55 handle. And, of course, we will discuss all of that more. But first, Shai, the news.
So we have NASDAQ seeking to extend the trading hours to a 23.5 weekday trading, which is essentially what the futures markets trade at. They'll have pre-market from 4 a.m. to 9:30 a.m. And then the rest of the trading session will be from 9:30 a.m. to 4 p.m. and then they'll start up again. So basically the same hours as futures trading. Their NYSE already applied for this months ago, so only seemed natural NASDAQ would do that as well. Then we also have interesting, Visa offers stablecoin settlement for U.S. banks using USDC. That's the Circle's stablecoin account. Stablecoin. So far that's on the Solana blockchain. So far, we have Cross River Bank and Lead Bank are among the first to use this service. So, we keep talking about how this administration is very pro-crypto, pro-stablecoin. So this is just another integration into U.S. financial markets, essentially. And they've been doing this testing this overseas, but this marks the first full deployment in the U.S. banking system. Then we have, moving on to my favorite topic, EVs. So you have Ford to take a $19.5 billion, with a B, charges tied to EV overhaul. They're writing down $19.5 billion because their Ford F-150 EV vehicle sold approximately 4,000 vehicles in a year compared to 750,000 Ford 150's regular ICE vehicles. So they have been struggling with their EV lineup, so that will end. And then on the heels of that, we had the EU to abandon combustion engine ban. So in 2035, they were going to ban all combustion engines. And that said, they have reversed course on this. They will allow plug-in hybrids and electric vehicles with fuel-powered range extenders. They also will allow ICE vehicles if you use renewable fuels or if you just use green steel. Then you're allowed to continue to produce those. So all of this is really bullish platinum and palladium because of catalytic converters, both of which are up this morning. Well, palladium's rather flat, but platinum is up $26 on that. Then we have the B of A poll shows sweeping investor optimism into 2026. So money managers are set to ring in the new year with resounding confidence about everything from economic growth to equities to commodities, according to a poll by Bank of America. I guess the investor sentiment was at 7.4 in December on a scale that's capped at 10, which is the most bullish survey outcome in 4.5 years. So everybody's very excited about markets apparently for next year. And overnight, just some notes on the market. We had indices fill the contract gap overnight, and obviously crude is down. Again, we're hanging on to that kind of 55 level. If we do break that, I do have monthly support at 51.89 and below that at 50.80.
I think we're going. I think we're going there. I mean, and the tape is just so lackluster. The crude oil tape is it's just a torture chamber if you're trying to be long. I mean,
yeah,
I've stopped finally.
And it's seasonality too. You have December and January tend to be the very weakest months, and then we start seeing the upswing in prices again in about mid-February.
Okay, well. It's definitely not the focus right now, crude oil, but
Right.
it is. But the fact that it is going lower, it is something to note. Going back to like the EU changing. Go ahead, Jimmy.
I'm sorry to interrupt, but heating oil also is about to break through a double bottom here, and I look at this heating oil market as powering our supply chain, and this price it looks like it's going to tumble rather rapidly here.
Yeah, I mean, and look at that. Going back, I was going to say, just mentioning the EU talking about setting a date for 2035, whatever, getting rid of combustion vehicles. It's like the marketplace is going to dictate when we move. We all know we're going in that direction, but how you can't force things to happen and just cut it off at a certain date. I think they have all eventually realized that. But especially with energy prices continuing to come down, doesn't that slow down that process a little bit as well? Because it's going to be a little bit of ebb and flow because it's not going to be much of a hurry. You go to a car dealer, you're going to pay more for an electronic car or electric car.
Well, and if you look at just electricity prices in the EU, they're much higher than they are in the U.S. So now it's becoming more expensive to.
That's what I mean.
Right.
Right. And so you have, the marketplace is going to dictate when this all eventually sorts itself out. But yeah, good call too on the heating oil, Jimmy. I didn't have that chart up. I mean, what does that mean, Craig? Well, we'll get to you talking about your overnight thoughts, but the fact that the energy market really is just so lackluster, I mean, I'm wondering, is it signaling anything to us?
I think the heating oil is a good call out. This administration has tried to push this narrative about a manufacturing renaissance, and things are really looking up for next year. But outside of the AI capex story, there really has been nothing. There's been no momentum, and you've seen that in the ISM, right? The ISM continues to be below 50. The new orders component's been weak. The regional PMIs have been very weak, and so again, away from AI capex build out, there's lackluster momentum, and heating oil is a good representation of that, right? I mean, it kind of goes into industry and facilities management, and so it's just the underlying economy is just not that robust, and I think that's reflective broadly in the energy markets in the U.S. And you put on a little bit of the excess supply situation, which we continue to work through, and it shows the momentum is just not as robust as I think maybe folks expect it to be at this point.
Yeah, I mean, again, if you just pull out all of these different things that we talk about each and every day, and you just look at the indexes are performing very well. In my opinion, what comes out to me this morning is that you have Russell and Dow still the short-term upside leaders, and the question will be, will NASDAQ and S&P turn around and take the leadership back like they always do in this divergent tape, or does the NASDAQ stay a little bit laggy here and ultimately just cause a sideways tape for the indexes into the end of the year? I think that's kind of the story I see for indexes right now and into next year especially. Because again, the market is not going to be led higher, I don't care what anybody says, by the Russell and the Dow. It's just not going to happen. If the NASDAQ is not the leader, sorry. It's going to have no momentum, but eventually runs out of gas. You're not going to have an upside market that's led by Russell and Dow with NASDAQ being the offset. It's just not going to, It's not going to happen.
The way you would have that would be if you thought the economy was really reaccelerating, right? If you really thought that the economy was on very stable footing, that manufacturing growth is about to reaccelerate next year, that tax cuts are coming in, the money's going back to the consumer, weak dollar's helping, the Fed's accommodating, deregulation's there, right? That's the bull story. And frankly, that's kind of what people have been romancing a little bit here over the course of the last couple of weeks is, sure, the NASDAQ's been sideways to down, but the Russell's making new highs and the Dow. People are getting excited about that narrative. I think today, tomorrow, and Thursday's data will really go a long way to helping us determine whether or not that's a narrative that can be traded, right? If we get, strong payrolls today and no inflation on Thursday, I think people might feel comfortable. Okay, we're out of the woods here. That setup looks good into next year. But if the payroll numbers are weak and inflation is sticky, then people are thinking, okay, well, I'm rotating out of big tech. What am I rotating into? I can't rotate into housing. I can't rotate into manufacturing. I can't rotate into autos, right? These are places that are all weak. The low-end consumer is continuing to struggle. So what am I going into? I'm more likely to go into defensives. I'll go into staples. I'll go into healthcare. Just
utilities.
Get me. I'm not going to. And yesterday I thought was interesting. We'll see if it follows through today. But most short index was down 3.5%. High beta momentum stocks were down 3% yesterday. Those things have been leading over the course of the last couple of days on this rotation. We'll see if that snaps back now that some of the liquidity continues to get pulled out.
Yeah, short term, no doubt they could. Again, I think that's a very bullish sign. I'm talking about, how long can that last? I mean, eventually that divergence has to work its way back to NASDAQ. Like eventually NASDAQ and S&P have to go back to being the leadership. But again, there's in the short term, I think it's healthy. I think it's bullish. I think that the Russell and the Dow doing what they're doing at the end of the year is what everyone's finally been waiting to see. Look, I stopped trading the Russell. I'm not long it, of course. You know what I mean? It's just like, it's kind of funny, but that's just the way things are, right? Like it's that creeping, backdrop that's like happening and it feels like no one's in it. And that's what it should be in a bull market. Jimmy, let's go to the tape a little bit. S&P overnight had a little bit of a sell-off. I was watching it. I actually did dip in and traded a little bit overnight. It's not something I normally do. Trading it a little bit. But S&P 68, 69, 75 down around 11 this morning. Really just sitting this morning right now, right on like the 8-day moving average, which is, whatever, just kind of where we've been. Did not make a new high for the year as of yet. Well, who knows? But ultimately, S&P still the one that's kind of rangy up at the top. NASDAQ this morning, 25,270. Remember talking March, everybody? So we've moved on to March. NASDAQ below really 821.34 moving, 821 and 34 moving averages that I keep an eye on all the time. Again, that's the laggard. That's the divergence that we see. NASDAQ's weaker while we have Russell 25,550. Coming off of new all-time highs 2 sessions ago, still steadily above the 8-day moving average, down around $4 this morning, and then the Dow's 48,803. Yesterday's session was another new all-time high in the Dow. As you guys already pointed out, or Jimmy did, heating oil down this morning at 215. It's down 1%. Natural gas is down 2.25%, down to 391. Crude oil is down to 55.80, down a full buck. Again, energy lackluster. We'll talk more about it throughout the morning. We'll see what data brings for that as well. Remember, 8:30 data. We'll be discussing that. Gold this morning, 43.24, off around 10. And when you look at gold, it didn't. Gold. It's if you really look at it, and you go right back to an S&P chart, it looks just like it. Like gold made that high a little while back. S&P did. Same thing. S&P didn't quite make a new high right now. It's sitting just above its 8-day moving average. I think the only reason why I mentioned that, and I'm not saying that it's really completely correlated, I just look at it like this, is that if the indexes do start to fall apart at the end of the year here with NASDAQ leading lower, if that does happen, I do think that will pull metals down in the short term. Just my 2 cents.
Well, because I think you'll, cut your winners, right, for the year, right? What are you up on?
Yeah, not everyone will love seeing, if you're long metals, you won't love seeing S&P and NASDAQ going lower. Now, if it doesn't, then metals stay steady as they go. Silver, $63 this morning, 63.01 off 58. And then we've got platinum, as Shai said, up 27.5. And then copper is at 536. Bond market up a little bit this morning, Jimmy. This is where we'll start with you. Yesterday did not make a lower low, although it did try a couple times to go down near towards Friday's low. It didn't. Back up now towards yesterday's high. Trend is still down, and you got dollar down pretty much against everything: pound, euro, yen, and Swissy, anywhere from 1/4 to 0.5%. So dollar weakness today. Bonds up. What'd you see in the overnight tape?
Yeah, I mean, bonds, right? I mean, I don't know if we have a good bottom yet or not. We have a couple of days of kind of slow grind up into that 115 handle right now. What's interesting, though, is I'm kind of tracking the monthly volume profile on a lot of these markets, including the 30-year. And we're starting to, we're getting away from that 117.12 dominant point of control. We're starting to get volume building below that 115.24 line in the sand we talked about last week, and specifically at the 115.19 level, and then again at the 115.06 level. So volume is starting to accumulate in that area, suggesting, all right, maybe we will end up being sideways here for a little bit longer. But having said all that, I mean, we can't break through that ADMA at all. All the moving averages are arcing down pretty nicely, and MACD's not helping the situation out at all. So I'd feel more comfortable if we had a little bit more strength at the bottom that we saw when we touched that 114.16 30 seconds. Not really seeing it right now. 30 years yield this morning 4.84%.
I completely agree with you. It does not look like a good low to me. Again, it held a level that I wanted it to hold, but so what? I mean, it's not really a washout. It's still trending lower. I mean, that's the key, right, Jimmy? It's just trending lower. It's not like the bounce was like, all right, yeah, you bounce. Yeah. Again, that's something to watch going into the coming sessions.
Yeah, and Bassett, this morning was out trying to defend Hazard. Like, he was trying way too hard to defend him, which was not a good look.
And we just had, really quickly, the ADP weekly come out. Just throw that in there. It's not as impactful, I think, as the actual monthly report, but was plus 16,250. And that was a rolling 4-week average to November 29th.
Got it. Well, let's preview our guest and let's preview the data. So, Shai, let's do that before, because I know we've got data in 12 minutes-ish.
12 minutes-ish. So we have, again, partial October data that will be largely disregarded, and we'll have all of November data. The survey is 50,000. Now, when you go look at the estimates, they're literally all over the board, from minus 20,000 to plus 125,000. So huge, wide range from the analysts. So, I think that, there's going to be an issue partially with, the furloughed government workers as well. Are they, what does it count as? So we'll see what's going on with that. And then, of course, we will get October retail sales data as well. So we'll keep that in mind. And then we have... hold on one second.
Yeah, so we'll have data, everybody, and then we'll go over it with the team. And then following that, then we'll bring in our guest, Mark Yusko. Love Mark.
Yes.
Good dude.
Mark Yusko, he is the CEO and CIO of Morgan Creek Capital Management. He's probably well known for, he was an early adopter for Bitcoin.
Way early.
In his fund. So looking forward to talking to him about that, as well as markets in general.
I mean, I probably had Mark on Futures Radio Show podcast 7-8 years ago talking about Bitcoin.
Yep.
I mean, he's definitely somebody I've had a lot of conversations with. Really great guy, too. Craig, data today, what are you looking for coming out of this?
Yeah, I'm just kind of going through this ADP number and then into the NFP number. So this will be a good tell if this ADP number that we've been getting weekly actually is telling about what the NFP is going to look like. Because we've seen now this ADP number rise from being negative at the early part of November to rallying through the month. And so 16,000 jobs per week over the last 4 weeks suggests mid-60s payroll growth for the month of November. So maybe this is signaling a little bit more momentum in the NFP number. We'll see, but I think the market's looking between 45 and 50,000 for the NFP number here for November. I think the October number will be important too. just to look back and say what actually happened. The government was shut down. We also had the furloughed workers from earlier in the year. Do they show up on the roll? So I think people want to understand a little bit more about what the data really looked like in October and November, retail sales tomorrow too, and get this idea of whether or not the economy is on stable footing as we transition into 2026, or is it really softening as we thought it might be into the shutdown. And then we kind of, because the data went away, everyone's like, it's not a big deal. And so vol got sold, equity markets rallied, everyone was happy. But the underlying economy, I think people want to understand that it really hasn't been materially slowing. And so I think it'll be important. I think this data will matter. It'll matter for the bond market. We've seen a decent curve steepening for the last couple of weeks here. And I think weak data today would continue that trend. I think the front end yields will continue to move lower. But I don't really think we're going to see much of a rally in the back end yet. I think people are seeing some of the other cross asset and other signals out there from term premium expansion that are making long end bonds a little bit more suspect from here.
I think if we have weak data, I think that the markets will like it, because that means that the Fed's looking at weak data, they're more likely to cut. I don't think, it will really bother markets unless we get a washout number in either direction.
Yeah, I mean, I agree with you, Shai. I mean, I think that any sort of weakness probably gets taken as a short-term bid in equities, whether that holds or not. I think the algos will look at it as a short-term hold. Again, because we've not had news in a while, and so I think any sort of weakness, I think they will look at as like, oh, the initial thought is maybe more rate cuts, and that'll get washed out as time goes by. It'll be a nothing, but initially that's probably what we look at. Stronger data gets interesting on the long end. That's why I got the 30-year up. Stronger data makes you really wonder how the long end's going to react today. And Jimmy, we'll go back to you. When we look at the 30-year, again, it's so fragile here, I think. When I have my charts up, it's just simple 821, 34 moving averages, Bollinger Bands, and I've got my beacon indicator, which is just free, showing my support and levels. And we're below my support, which is 115.12. I just have nothing below here. It's like if they start to fall, it's like kind of timber. And again, what will that do to the equity markets?
Yeah, I mean, September lows are, 113. I mean, there's a lot of room to break on through that 114.5 line in the sand right now to get down to that 113 level. And, yields would be closer to 5, right? Maybe even above 5. I haven't done the math when we get that low. So there's definitely potential on the downside. And this number might kind of move this around a little bit. I mean, I'm looking at the CME Fed Watch tool, and we're 75% chance unched right now. I know it's not definitive like 90%, but it's still a pretty big number. Yep.
And when you look at the 10-year, sitting just below 4.2, I talked about this earlier in my note this morning. It continues to defend 4.2. You can go back and look at. You can actually chart this if you want to look at it, and it's been defending it. And if you get a push above 4.2, I'm just curious what you guys think. Is the equity market's going to recognize that? Because to me, the data this morning, equities are going to be. I think they're going to be a little shaky, but the bond market and the treasury market's where you want to be watching.
Yeah, it does seem like the long end yields moving higher. If you look back over the course of the last few years, when we've had our decent equity sell-offs, it's been because bonds have been weak, and people have seen kind of rate of change on yields moving higher in the long end and saying this is going to be a headwind for equities. And so I think that, again, we're in that kind of dynamic here. It's less a function of future inflation expectations and more a function of term premium expansion, right? We've been talking about supply growth for the long end, AI, CapEx being debt financed, Japan stimulus, Germany stimulus, U.S. stimulus. There's a ton of paper that needs to come next year, and people are requesting more compensation for that. And so as we push long end yields higher, pressures equity multiples, and so it just makes it a little bit more difficult for the indices to rip roar away from us.
Yeah, exactly, and especially with the bond market teetering on lows, not necessarily the treasury market, which is the ZN. Again, everybody, I just encourage you on a day like today with data. I'll keep up the bonds. We'll go to the NASDAQ and, of course, watch all of that. But I want you to watch something this morning. I want you to see how the news reacts or how the bond market reacts to the news and know that that's really the lead for equities right now because the bond market is going to be really more of a tell. It's also in a more critical area. That's something we don't talk about a ton. When data comes out, well, we haven't had data in a while, but when we do have data, I'm always looking at the market that is teetering also on a more important area to see if that will be a leading indicator for the markets. And what market is teetering on an area right now? That's the bond market, because it's teetering on higher rates, lower prices. It's been trending lower. Equities, if they pull back a little bit or rally a little bit, it's not really a significant tell, I would say, for the rest of the tape. And so, again, this morning, everybody, I encourage you, if you've not followed ZB or ZN before, watch them on data. Even pull up the depth of market, too. Watch that. I mean, I used to trade the ZN on the data points only. I never traded. I did trade S&P on many of them, but most of the time I was trading ZN just because it's such a better trade on data points. It really goes to levels that you don't think they can get.
I also think as soon as we get the data, it'll be interesting to see the breakdown, because November was, or at least at the beginning, kind of pre-holiday hiring for Christmas and Thanksgiving, and so it'll be interesting to see, are all the jobs just in the service sector, or what does the breakdown really look like?
Yeah, and
we're
gonna learn something.
The shadow open, the 820 open in bonds were, it kind of stopped this kind of pre-market rally we had as we were driving up a little bit higher. And then boom, that kind of shadow open, I call it shadow open. I guess it's the real open 820, kind of brought us back down a few ticks. So right now it's definitely in pause mode for this release.
The other thing I'd say is we should be keeping an eye on the dollar too. We've been talking, kind of through the end of November of this DXY breaking out, the dollar strengthening over the course of the last 2 weeks. The dollar's gotten destroyed. It's really, DXY is broken down, and that move is accelerated after the Fed's decision last week to restart T-bill buying. And you're seeing it really in dollar yen and in the euro too. We get a BOJ meeting later this week. So keep an eye on the dollar. How does the dollar react to good news or bad news, outsized news on this print? I think will be, another good tell to watch here, because the dollar is on the precipice here too. DXY is, 2.5 month lows there, and looks like it's breaking down again.
Yeah. So if you don't have DXY in your chart, you can also pull up the euro and look to see that's going to be the strongest opposite correlation to it, and see if the euro rallies. That would mean dollar's breaking, likely. So someone's asking me in chat, what are these? This is just my beacon indicator. I've been using it for over 20 years. It's free. Chat, mission control, as Jimmy likes to say. Put that in chat, and you can go and you can download it. It just shows my support and resistance levels. Yellows are my neutral levels. Reds are resistance. And so basically, if it's in a red to a yellow and there's no blue, it just means that it's bearish until it trades yellow, right? And so if it gets below yellow, and then it's like, it's right now it's saying that it should trade yellow is basically what it's telling me on my chart, which it technically has not, since it crossed over it once, but it got like within like a few points of it a couple times. So it's like the indicator will turn off after that happens. But then if it gets above red, it turns bullish. Below yellow is even more bearish. So it's basically like my boxed out area, which we've been in for,
a while.
And so anyway, that's what I'm looking at. Jimmy, we don't have an edge report. We're about a minute and a half out, or actually we're about 2 minutes out, maybe.
2 minutes out.
Do me a favor. Let's go to Jimmy's charts. I'd like to have him give a little bit of a rundown and on what we're looking at coming in here, Jimmy. Maybe do ZB, gold, NASI, or whatever you feel, like 3 different sectors of the market.
Yeah. Okay, real quick, ZB right here is, this is kind of this bad low we talked about, that 114.17 wick low. A couple of updates, a little bit pushing us back into this area of support and resistance in that 115 handle right now, below that ADMA. So again, it's inside bar if you measure the bars by the wicks, below that ADMA, not looking really, really perky. Intraday, we had that big rally pre-market, then boom, we kind of settled back to, we're actually 115.04 now. So this is anticipating actually a little bit of good news, I think. We'll see what happens there. The Bitcoin, we could look at the Bitcoin if you want. What's the other ones you wanted to look at, Anthony, real fast?
I'd like to see NASDAQ, gold, and you already did ZB. So maybe
all right, let's go
Bitcoin too.
Let's do NASDAQ here. The thing about NASDAQ is the monthly volume profile has over a 3% range between the top of the value area and the bottom of the value area. It has a nice point of control, which we're way south of that point of control at 28.628. Again, this is a monthly look at the volume profile. And, the 8 and the 21 is starting to get really close. They're starting to touch here, and that's also kind of a bearish signal as well. Although we did have a nice buyer's wick today, bringing us back up to this longer-term VWAP. That's that white line going across there. So again, it's like our buyers in charge, sellers in charge. Nobody really knows. We're right at that VWAP. Retracement wise, though, we're not as strong of a retracement back up as we are in the E-mini S&P. We're a little bit weak right now. We're below that 61.8% right now as well. So the NASDAQ has got is a little bit weaker, as you've already pointed out, than the E-mini S&P. So we'll see how it moves. Intraday, there's some nice targets, though. There really is. That 0 DTE put on the upside, I got my eye all over that 25,400. And then if you go a little bit higher up, you're going to get a JAX 1 at 25,500. Those are pretty good targets. On the downside, if we break down past that session VWAP, notice we've been above that session VWAP for a long period of time, and we had a really nice VWAP touch here. Uh-oh, something just rang.
Here we
A
come
bell
with
just
data.
rang.
So hold on 1 second.
Yeah.
Non-farm payrolls came in at plus 64K, survey plus 50K, so better than expected. Change in private payrolls also better than expected at 69,000, survey 50,000. Unemployment rate ticked up at 4.6%, survey was 4.5%.
Initial reactions.
This is.
are
I mean, looking
equity
at the 30,
indexes rally.
looking at the bond. I mean, this is the classic bonds kind of getting ahead of themselves, right? Nice kind of rally pre-market, boom, anticipating what the number's going to be. Number hits the street, and boom, continuation rally.
That's why I said watch ZB, ZN, right? I was looking at it in the corner of my eye. ZB and ZN right away rallied, and then equity markets were going simultaneously. Also saw a touch more of dollar weakness coming out of it. You saw a little bit of a bid get caught into the currencies. But nonetheless, we finally have some data. We got some initial reactions. Not much energy really off of the immediate reaction. It's not like it's just really whipping around and giving it back. So like the market, you see the bonds they want bid and have relatively stayed bid, and same with equity indexes. So we've got to get to our guest with Mark Yusko, but Craig, final thoughts before we wrap this morning.
Yeah, it looks, the front end's rallying more, indicative of more cuts. I think it's this 4.6% unemployment rate, because the Fed was looking for 4.5 for the end of this year, and there's only one Fed member at 4.6 for next year. And so the bar, if we're exiting the year at 4.6 and we have any move higher in the unemployment rate, that means the bar to cut is actually lower. More cuts could come. So keep an eye on that number. I think that's maybe why the bond market is reacting so bullishly to this print.
And it was a lot of service industry, just as I thought.
Got it. And Jimmy, any final thoughts for you before we let you go?
No, I'm just going to keep my eye on gold right now. Also, gold is actually driving up toward that one-day max right now. It's definitely caught a bid. In a day like today, this could keep moving upward.
Yeah, everything caught a bid off of this data. All right, guys. Thank you so much. Let's move on to our next guest. Shy, preview of our guest.
Mark Yusko, CIO, CEO of Morgan Creek Capital Management.
He doesn't need an introduction.
Right?
Let's get Mark in
Everybody
here.
knows who he is.
Good morning, Mark.
Good morning, y'all. How you doing?
Doing great. So you got to hear us talk a little bit about the data. Everything caught a bid initially out of it. Bitcoin did as well. You see it's kind of risk on coming out of this across the board. I mean, everything rallied except for the dollar, which is kind of what we've seen a lot of this year, right, Mark? It's really been the theme, everything coming out of the dollar into other assets. I don't really know where to go with you right out of the data. I mean, let's maybe talk about the year that was and the year that is now, because it is changed just a little bit. And,
Sure.
and what's your viewpoint on where the markets are right now?
Yeah, I think generally speaking, as all you guys were talking about in terms of the major markets, everything changed on Earth Day, April 22nd. From kind of January 1st to April 22nd, it was, bad word show. It was ugly, right? Everything was selling off. And that was primarily, in my view, because not of anything that the U.S. did. We're very exceptional in America. We think it's always us. It was really Japan. They had a new Bank of Japan governor. He was an academic, and he believed that he could strengthen the yen, which is a problem for all markets. Problem for the yen carry trade. And long story short, everything was ugly until they reversed, and the yen's ripped from 140 to 154 since then. Equity markets around the world have rallied. Everything rallied. Now, I spend a lot of my time in the Bitcoin world, and Bitcoin rallied super hard along with that, reaching a peak in October. And now there's a lot of debate in my world as to, is the 4-year cycle over? Does the 4-year cycle still exist? Well, it was never a 4-year cycle. It was 3 years and 11 months based on the number of blocks. But I'm probably in the camp that it still does exist. Humans are going to human. Humans get over ebullient at the top. So they force every market into a position where it's well above fair value. And then you have to have corrections. So I think we're in a very strange place. The dollar, quote unquote, has had one of the worst, I think the second worst year in the last 50 years. But it's not the dollar. It's just that everything else is doing relatively better. So it's really the yen and the euro. And when you look at that, I think you've got a situation, gold caught a super bid. People forget gold was the same price from 2011 till 2023. It's a long time for gold. Now, it wasn't exactly the same price every day, but it was stuck in this channel, and then finally broke out and was really dead money most of last year. And then I think kind of caught the naked short guys off sides, JP Morgan et al., and has really been squeezing hard of late.
So a couple things I want to talk to you about. One is I think that the crypto cycle, when you look at what's happening, let's talk Bitcoin cycle, right, is we have President Trump. This is a pro-crypto administration. I have not really been in crypto for the past several years. Once I saw Trump's kids getting involved in crypto and everything, I'm like, listen, man, this is not something I want to fade. And I continue to buy spot. I've been buying ETH on dips. I buy Bitcoin on dips, and I own spot. I'm not using leverage. And so that's one of those things. I'm looking at this presidential cycle, and I say, look, at some point they're going to continue to embrace this crypto space. Yeah. I am very bullish of it, and I don't really I don't know what goes on behind the scenes with other things that are happening in crypto. I have minimal knowledge of that, but is this not an administration that is very supportive of it? And if there's a time that crypto can do really well, this is kind of it.
For sure, right? And look, we know, particularly down here in the U.S., good old U.S. of A., that our politicians make their money not from what we pay them in salaries, but from trading, primarily in traditional markets, a la Ms. Pelosi. But clearly, this administration and the president's family in particular has embraced digital assets in mass. And I agree with you that they have done everything they can, from firing the SEC commissioner and replacing him with a more pro-crypto person, to getting the Genius Act passed, although I'll argue that's a little more sinister than people think. If you actually look at some of the details, it's basically a prop for U.S. Treasuries. Basically, you're not recognized as a true stablecoin unless you back with Treasuries. So that's a little different thing. But I think part of the trouble is, yes, you can have a pro crypto administration, and you can even have a family that has loaded the boat in things like ETH and Trump coin and other things. But if the liquidity is not there, then those markets struggle. And what we saw in that period I was talking about, where the yen was strengthening and everybody had to unwind global carry trade, digital assets did not do well. Administration came in after inauguration, tried to do a bunch of things that were positive. And, people will say that's the reason for the rally. I will argue that the rally really started with the reversal in the yen and liquidity flowing again. And then we get to October 6th. Well, what changed on October 6th, and what the hell's going on? Well, a lot changed on October 6th. October 6th was the end of that 3-11 cycle. It's 3 years and 11 months. It was December 18th in 2017. It was November 21st in 2021. And October 6th this year. And everybody's like, no, that won't happen this year because there's all the institutional buying, there's all the ETFs. Well, again, humans are going to human. Back in 2017, fair value of Bitcoin was about 10K. We got to 20K. December 18th, very important day. You guys spend your lives looking at futures markets. That was the day that the CME introduced futures on Bitcoin, which everyone applauded for. And I was like, no, you be careful what you ask for, you might get it. That was not a good thing. If you go back, Leo Melamed, name plenty of people listening probably know, former president, now chairman emeritus of the CME, in late 2017 said, don't worry, we'll tame Bitcoin. Like that's a strange word. Why would you say that? Well, we found out on December 18th at 20,000 just how quickly you could tame. So the naked shorts came in, pushed the price all the way down to 10 very quickly, then to 6 by November the following year. And then, the final cathartic blowout, we went from 6 to 3,200 in late November of 2018. So then we rally all the way back. Fair value rises to 32,000 by 2021. Unfortunately, what happens in markets is when the price of an asset sells below fair value, investors get involved. That's what I am. I'm an investor. I like to buy things below their fair value. Not good or bad. That's what I am. Then there's traders, and y'all are traders. And again, not good or bad, but traders don't really think that much about fair value. What they really need is movement, and they need activity, and they need volume, and they don't really care long or short. They just want to make some profits off trading. I'm terrible at it, so I don't do it. But people who watch this show, pretty good at it. So traders come in, and then there's speculators. Well, what's a speculator? Speculator has this interesting bias. People think it's bad. Well, it's really not bad. It's just the opposite of a hedger, right? Tracy and I used to talk all the time about oil. Oil producers have to sell their production. They usually sell it forward in the futures market. So they're hedging their production. Well, a speculator is just the opposite side of a hedger, necessary for market function. Well, the problem is that speculation usually happens, the hedging usually happens if the price of the asset goes above cost of production. So Bitcoin miners sell and the speculators come in, and that pushes price a little further. Well, then the problem is at the end of the cycle, you get the gamblers. And the gamblers who come in don't really care about anything except number go up. And they push the price higher and higher. You guys were talking earlier about we don't know who's in control of the market, the buyers, the sellers. And at least you didn't say there's more buyers and sellers. I love when people say that. I'm like, no, there's an equal number of buyers and sellers. It's just who at the margin is in control. Long story short, gamblers usually use leverage. And in 2017, there was massive amounts of leverage. You could 100 to 1x, right? Anyone would trade an 80 vol asset at 100 times. I don't understand. Treasuries, fine.
Exactly.
But Bitcoin shouldn't do it. We got to 100% above fair value. You needed an 80+% correction. 2021, you got to 100%, 69K over 33, 100% over fair value. Because of leverage, you had to fall. This time at 126, fair value 91, we didn't get as high. There wasn't as much leverage. FTX got shut down, Bitfinex kind of curtailed. So we don't need as big a fall, but I still think we're in that ugly part of the adjustment through middle of next year. Anyway, long answer.
I love it. What are your thoughts on, do you think you kind of talked about how the futures kind of changed the game. I totally remember when that happened. I actually was tweeting about it at the time.
Yes.
Because the futures were going to kill Bitcoin, and it did temporarily. But what are your thoughts on all of these ETFs now and where they sit? And, you talk about kind of the average price for, say, Ether that these ETFs are holding is, they're almost underwater at this point.
Yeah, it's a really important point
for markets.
It's a really important point that there is institutional demand, right? I'm a boomer, so they created these boomer wrappers. They created these products that boomers could one-click buy and didn't have to worry about custody and wallets and forgetting their seed phrase, so they can let BlackRock or somebody else do that. So there's been a lot of money that flows into those, but the problem is a huge amount of the money that went into those assets is not net long. They're short futures on the other side. Like, I love people report, oh, Millennium has $2 billion of Bitcoin or 500 million of ETH. Like, no, they don't. They're short futures on this because they're net neutral. They don't take long positions. They are a market neutral shop. So, and then when you have the presence of these long pools, it allows the shorts to get really egregious on the other side and do the spoofing. We've all gone through the gold trade years ago, right? So the GLD delayed. 2 years it was delayed. Why was it delayed? Well, actually, Scott Besson, our current administrator, back then said, there's this curious thing. The post-gold financial crisis, all the documents came out. And he went through and he said, JP Morgan's short like 2 times gold production. Like, that's a lot of shorts. And so some would argue that once they had all their shorts in position, said, fine, you can have GLD because we need someone to take the other side. So GLD came on, and GLD, everyone thought, oh, gold's going to go crazy. It didn't go crazy. It went down. And that was because of the spoofing. And, 4 years ago, I think, I don't remember the exact date, but 4 years ago, JP Morgan paid a $1 billion fine, $960 million fine for spoofing gold. And everybody's like, wow, that's crazy. Says, yeah, big deal. We made 20 billion, so it's cost of doing business. And I think that's happening in Bitcoin and Ethereum right now. I think the same thing's happening. I think Leo Melamed was right. The big guys who, look, of all the innovations that have come along, most of them left financial services alone, right? The internet totally decimated the market caps of media and retail. ABC, NBC, CBS, all their market cap went to Netflix. Mom and pop shops, all their market cap went to Amazon. Financial services was really spared. People said, oh, well, what about fintech? There was no tech in fintech. You made a nice fancy UI, UX. There was no tech. This is tech. Blockchain technology is the tech that will disrupt the need for financial services. We don't need to trust banks, brokerage, insurance companies, auditors, accountants anymore because we have truth. That's what a blockchain creates. It's a third-party, neutral, independent ledger system. It's just another way of accounting, just like the Medicis 1400 years ago brought dual entry accounting. So they're afraid of this technology. They don't want this technology, and they have fought really, really hard, to try to limit it. And they're going to lose eventually, but they're not going to stop fighting. And so futures, I think, are the latest attempt to try to tamp down on adoption by, putting volatility back in the game.
We got to have a little bit longer conversation about this here, Mark. I feel a little bit differently about it, but nonetheless, I love hearing your thoughts on it. And, you and I go back, you and I did podcasts on Bitcoin, like I was telling Shai, like 7-8 years ago. So
yeah,
always great catching up with you. We got to end it there. Everybody go follow Mark on X and check out what he's doing with Morgan Creek. Mark, you're the man. Thank you so much,
Thank
buddy.
you.
And Merry
awesome. Thanks,
Christmas.
guys. Have a great
Happy
one.
New Year to you,
Appreciate the invite. Everybody have a good holiday.
See ya. All right, Shai. Got to run. Got to go with TTrades. But one quick note, everybody. Yeah, we had a turnaround. Watch the bond market. It did go back and turn back down. I'm going to go to T and talk about that. Shai, talk about anything in chat that they need to know about the data.
Will do.
All right, see ya. Let's bring in T. What's up?
How's it going?
Good, buddy. Let's go right into the charts. Everybody, TTrades is here joining us. This segment is brought to you by CME Group, where risk meets opportunity. T, we finally have data. We finally have markets moving in a pre-market session driven by data. Not to say that I missed it too much, but I kind of did. And so we've got a lot of moving parts today. Take us through what you're seeing on the tape.
Yeah, and we actually also finally have oil taking out some sort of level. So uh, we have oil reaching into that previous month's low, which we talked about at the close of November here. It's just not the cleanest move for me in my system, but we do have it forming its monthly wick and then trading lower. Now, this is a bearish expansion candle, so if I'm trying to frame longs, then I'm just going to wait until the new year. But the one thing to notice on oil is if you just zoom out a little, we're in quite a consolidation. So keep that in mind, which I know you love oil so much. So thought we'd start with that.
You know what's so funny about that? You know how many people over the years have thought that when they saw my name, whether it was on X or something, they thought that like I traded crude oil, like my name is Crudele. I mean, but they're like, oh, aren't you like the oil guy? I'm like, nah.
I think I made a joke
I don't
on
know
that
why
like
so
the
many
second
people.
week.
You did too. I know.
Yeah.
And it's happened to me many times, you know. So anyway, I'm not.
But yeah,
that's my real name, folks.
Yeah, that's kind of it with oil. It was just kind of a breakdown. It's just not the cleanest way. But if I favor long on energies, so I would just be more so focused on the new year because that's when we can get that new change in direction. But let's start on some assets that most people are asking for in chat. So dollar, we talked about it last week, and we're just going to keep going week by week where we're talking about it. We're talking about if we were going to get a reaction here back into the range, or if we didn't. And you can see we just get that retracement. So price fails to displace or have an aggressive move back into the range, which just leads to it trading lower. Now it's into these lows. So I just am going to be watching kind of the same thing across a few assets today. Is just how we close this day. Do we close bearish and not really displacing back out of here, or are we going to get a nice move out of this range? The one thing to notice is I am looking at these monthly candles because this tells us where we can go and kind of how aggressive. So right now it's just a very aggressive bearish candle. So if we are going to, have a very bullish move, I'm really only expecting it back up into here, but I'd prefer this to just continue lower into the month end, which then leads us to being still bullish on foreign currencies, which we've been speaking about. And you can see we're just getting those trends up in the euro, dollar, and even the other foreign assets. So yen, CAD, and then the AUD, NZD. So we'll see how we close today. That's going to be quite important with the news.
Yeah, no doubt. I mean, and especially with the dollar, the dollar I think is really catching a bid because you had rates move higher, bonds move lower. So then a lot of times that will pull more people into dollars. Again, everything seems to be tied around ZB this morning just because they've been on the precipice of breaking out. And of course, looking at the dollar, just real quick before we move on to another market, what market is the strongest against the dollar's weakness right now that you're keeping an eye
Yeah,
on?
let me take a quick look. Yeah, I mean, I would just focus on euro and pound currently. Euro's the strongest today. Euro and pound have been leading. The month started with AUD and NZD being the strongest, and then CAD followed, and then they're kind of just chilling out, consolidating, while pound and euro catch up. I would stay away from the yen. Yen's more of a asset you want to be focused on shorting, which we've spoken about. So if the dollar is bullish, then you want to focus towards the yen. And then currently, if you're focused on dollar downside, you want to focus on euro and pound.
Got it. Yeah.
And then we
Good to
went and
know,
took a look
everybody.
at ZB. So just going with this, once again, when we take out a low, we just want to see the reaction at that low. So do we get a very aggressive move back into the range? No, we have this very bearish reversal candle out of this gap, which just tells you we get this continuation lower in bonds. And so I'd expect that to continue as we're just closing, we're not having an aggressive reaction at this low. And so that's just kind of how I analyze is, do we have a nice reaction here to go the other way? No, then we just get a trend continuation. So I'd be looking for bonds to just continue lower here.
Yeah, and as I've been talking about all morning with the panel, I mean, the bond market, because it's breaking out to the downside, again, everybody, that means rates are going higher. I told everybody this morning, watch ZB into the data. If ZB goes lower, watch that as a key thing to pull down equities. And you saw initially, You saw the ES go up with bonds, and then you saw the bonds come back down and make a new low, and then look what happens. NASDAQ's now down nearly 100, S&P's down 15. If the bond market stays weak today, it's going to be hard for equities to catch a bid. Just keep that in the back of your mind. It's just something to watch. It may not spill into your strategies, everybody, but I want you to learn how to think outside the box a little bit and understand sometimes there are things that are going to impact your strategy that are not technically driven, and it's going to be another market. And today, I think the bond market is doing that.
Yeah. Well, so let's go take a look at gold and some metals. This is very similar to oil on the monthly chart where we're not respecting this previous wick. So then I'm still expecting price to just continue higher into this previous month's high. So if you look at oil, that's kind of the opposite where it's not respecting the wick, looking for it to trade into the low. It's kind of the same setup here for gold. Not as clean in here, which is just kind of a consolidation and expansion. But if this is going to sustain, I'd want to see either a swing point here or out of this gap to just trade higher. So I'm just expecting more of a bullish week or just continuation into the end of the month, end of the year higher for gold. And then that's the same for silver. Silver was stronger than gold for gold. And then that's the same for silver. Silver was stronger than gold the last few weeks. And so it's just finding a consolidation. We'll see if it breaks out again or what it does. This is just an asset that I'm not really looking for shorts in because if you tried to short metals all year, you're not doing too great. So I'd rather just keep focusing on the trend to the upside there.
Yeah, and again, weaker dollar,
And then
right,
we can
T?
take a look at indices. So starting in Q, there's a few things to notice is we open and then trade higher first. It's better seen on ES here. We open, trade higher first, which then is favoring to the downside because we're making this monthly wick and then we're currently expanding lower. However, I am bullish on indices on the higher term. So I'm just focusing on today's close, right? Because if we can form a reversal closure here, then I'll be looking for some sort of retracement or reversal on Wednesday or Thursday, and then we'll see how we react here. If we get a nice bullish reaction out of this area on indices, then I'll be favoring to these highs over here. If we can't get that, then I'll just be looking for us to trade lower. So like I said, it's more of a reaction game this week for me. It's nothing I can really be super confident on anticipating. It's more of just how do we close this day and then using that data for the next day to anticipate.
Can we go across the gamut today with all of the indexes? Because we've had this divergence, T. I'm curious to see what you're seeing across the board. So we do Russell, NASDAQ, Dow, S&P.
Yeah, so the Dow is currently the strongest on this higher time frame. And the easiest way to see that is just look at the trend and the candles, right? So you can see this one is making higher highs, higher lows, and sustaining, while ES, you can see making lows, right? So if we go draw the same open of the month here on the Dow, you can see we're way above it on the Dow versus on the ES and NASDAQ, we're way below it, right? So on the daily time frame, NASDAQ is the weakest, ES is in the middle there, and then YM is the strongest, right? And we can take a look at RTY. It's usually going to be tracking fairly similar to the Dow, and it's a little bit weaker than the Dow here. So if you want to focus on that higher time frame, the Dow is the strongest. But intraday, I kind of compare these all on the lower time frame. So for instance, Dow is the strongest on the higher time frame, but yesterday on the open, it was actually the weakest, right? So you want to compare it on multiple time frames depending on the time frames that you're trading.
How much time into the day do you give it before you identify who's the stronger or the weaker?
You can usually use Asia and London session to do that. So for example, I just like to do it on the hourly chart, or even on the Dow, you could use like the 5-minute or 15-minute off the open yesterday. Yesterday, they all just kind of trended, so it's not the best example. But you can usually see where we're propped up from London session. So for instance, if you take a look at the overnight data and one is way propped up in the range while the other is lower, I just compare the structure, any differences in structure. So for instance, if we have this low here and the other asset takes it out, well, then it shows me that this one is stronger because it's propped up higher. So really just location within the range, if it's taken out its previous day high or low. So for instance, if you look at ES at the same time, it didn't take out its previous day low, so YM was weaker. But you can just use closures like that.
We've got a minute left, T, with you. Anything you want to show everybody that we didn't cover going into the open today?
Not too much. I know someone asked about what was it? Natural gas. So we can go take a look at that really quick. So you can see we
who is
opened.
that person's handle?
I don't know. I can't remember.
Hey, I got to remember them because if they're trading natural gas, they're kind of crazy. You know?
Yeah, but you can see we open, trade higher first, and then we come lower. So see how we're forming the upper wick on the monthly. So I would just be expecting this to continue lower into the month end. But the thing we want to watch here is we have taken out this low. So we want to see the reaction here. Do we get a very aggressive reaction? Because if this gets bought back up, then we can start a trend another way. If we consolidate or form some sort of small retracement, then I'd just be looking for us to trade lower into these lows here, which if you zoom out are quite the lows, right? So it's quite interesting to look at there.
Zenvex, he goes, I'm trading it. And also, yes, regret meeting her, the natural gas.
I used to watch it a little, but it's like it just has some moves that I'm like, what is it? What's going on here?
It's kind of psychotic. Yeah. Last thing, everyone's asking, or not everyone. We saw quick Bitcoin. We'll extend a little bit.
So we can take a look at Bitcoin
too.
So here's the thing: is I'm bearish to Bitcoin to this previous month's low. We spoke about this here. It's just, you can see it once we get this super large range or this expansion lower, it can set up some consolidation conditions. And that's what we're doing. We're just consolidating. If we are going to take out this low before the month end, I don't want to see this high taken out as it is protected within my strategy. So I'd like this to see a continuation lower in here if that's going to occur. It's not super interesting to me because I prefer an asset that's just trending off the month end. If you notice, when you have nice trending conditions, it's usually going to be early into the month we start a trend. And if you look early into the month, we're not trending, right? We're spending all of this time consolidating, which leaves just a little bit of time left in the month. We're about halfway through now to get an expansion. So if it's going to go, we kind of want to see it go in this next week. Otherwise, it's just going to consolidate the rest of the month, and then we can focus on January.
Yeah, as someone who's added to Bitcoin as of late, again, I talked about this with Mark. I don't trade leverage with it. I own it. You could just feel it. I don't even need to look at the chart every day. I open it up and I look at it. You could just feel the consolidation in Bitcoin. It just feels like it's just lacking so much energy. I've been very cautious on, adding too aggressively down here because really part of my strategy is when I see it get killed because I just hold spot. I buy a little bit here and there, very small increments. And I'm like, I've actually paused buying it. I'm like, maybe want to pump the brakes on this just for a little bit here. Show me something first.
Slow down the averaging.
Exactly. Yeah, no, yeah. Well, all right, everybody. That does it for this segment. Once again, sponsored by CME Group, where risk meets opportunity, where TTrades is with us talking about all markets, really getting you outside of the indexes. Go follow my boy T on X and check out what he's doing on his own YouTube channel. Honestly, TTrades' YouTube channel and X are really some of the best in the business. You absolutely must go and follow them. T, you're the man. I won't see you next week. Merry Christmas to you, my brother, and Happy New Year.
You as well. See
Tomorrow's
you in
my
the
last day. See you then, buddy.
Oh, you're retiring?
No, Wednesday's my last day for 25. All right,
I'll see you.
All right, bud. I'll see you. All right, everybody. About that time, we finally got some action. What a perfect day to have Chris and Merritt on here. Finally get some action. And looking across the board, quick recap, then I'll bring in the boys. Again, you had some data this morning. We talked about it, non-farm payrolls. We talked about with Craig and Shai. 4.6 was the number. Initially, a little bit higher on the unemployment side, which caused initial rally in bonds. We were talking about that to keep an eye on what bonds did. And then when the bonds rallied, equity indexes followed. Then bonds made a new low. Everything followed lower. And now here we are with equity indexes getting a little bit soft. The dollar continues to get weak against currencies. TTrades covered that. And the bond market now is actually just stone cold flat on the day. And gold continues to catch a bid, which is not surprising when you see the dollar continue to get weaker against really kind of everything except equity indexes. So as we like to call it here on Tuesday, black boxes. Let's get ready to trade the open with Merritt Black and Christian trading boxes. What up?
Morning, guys.
Morning.
So let's get right into it today, boys. Had some data this morning. Any trades from either of you on the data?
No.
Not on the number, no. I'm in a trade now, but no.
In a trade right now. So let's start with Merritt. Merritt, what are we looking at?
I shorted natural gas. I don't know what I'm doing. Look, it's a good breakdown.
He's a sicko.
You guys were
man,
talking about it. I pulled it up. It was
He can't
dropping
help
towards the
himself.
lows. I had to short it.
I saw it going down, so I shorted it.
No,
awesome.
natural gas is obviously one of the most in-play markets. It's really got some, this time of year is typically good. If you look, this is where natural gas shines, is when we start to get these wintertime numbers. Is it warmer than expected, cooler than expected? What are those demand levels going to look like? And natural gas can be a real, as we know, barn burner, but it's a tradable instrument. You certainly don't want to trade it without a stop. But no, it's a real market. We allow people to trade it at Apteros, and it can, when it's moving, in the summertime when it's dead, I would prefer not to touch it. But when it's moving, it can be really nice.
Yeah, I think the one thing, Merritt, and I love that you trade multiple markets, but you have the ability to come in and out of the markets, and you get in touch with them when they're in play, and you feel it, and you see it, and everything aligns for you, and you're able to do it. And it's really, people don't appreciate this enough, but it's a switch, right? Natural gas. He looks at it. You could see it within a few seconds. What's the play? Looks at it. Comes in. Already knows how to manage his risk. It's not that easy for everybody else. And I say this, and I joke around it obviously earlier with natural gas. It's one of those markets where obviously look at the micros as well. But when you jump to these other markets, especially when you get into energy, soft commodities, they move differently. I mean, a lot of you probably had quite the lesson this year trading gold. Probably some really good, some really bad, and they move a lot different than the indexes. The indexes, what's interesting about them is that they're pretty much the same over and over and over again, right? It's easy to identify the slower days, easier to identify the days when we're a little bit busier. It kind of like pops right out at you, and as a newer trader, you can come in and see it. These markets creep up on you with busyness. All of a sudden, you get natural gas, and you're just like, wow, the average has been moving 50 ticks a day, and then it moves 400 ticks in a day. You're like, oh my God, what's happening right now? And that's the reality of it. And if you don't recognize that, I think it's subconsciously you have to really you have to be mentally prepared here to bring it forward right away. And we don't talk about that much, Merritt, in the market, changing that you do from one market each week to the next.
Yeah, I do think some people overcomplicate it. I really do. I think some people are that maybe they're used to trading NASDAQ, right? And that's kind of what they came up on, and that's what everyone else was around them trading, so that's what they traded. And there's like a fear. There's like I have to become some form of a specialist with some just deep understanding of the personality of this market before I can touch it. And first off, I just don't believe that that's true. I think you want to be prudent. You want to understand what's the tick value, how much size do I need to be trading in this so it fits for my strategy and my risk tolerances and what I'm doing. And then, maybe trade it for a day, a week, something in sim, and just understand a little bit about the speed of its tape, what's normal, what's fast, what's slow, just a little bit. And then you're ready to trade it, as long as you have general trading prowess and you have an edge and you know how to manage risk. Another market, it's, back in my SMB days, you kind of learn like, you don't have to know what this company does to if it's got volume and above average volume and it's got a news catalyst and activity, you don't really need to know what the company does, right? So I kind of bring a little bit of that to the future space. If you were to ask me trivia about natural gas or something like I'm not your guy.
Yeah. No, I agree with you. I think once you have some experience, and I do believe in starting and getting experience with one market first. And I think you develop skills, execution skills. Market going from one market to the next is not that difficult, but understanding, like you said, tick value, there's a little bit of nuance with it. Is there a data point that day? Make sure you again, once you're managing risk across the board. And I have found that some tools work really good in some markets, some don't work as well in others. And that's stuff that you figure out. And as experience goes by, you learn that stuff, as you're going through, trading these different markets. One thing I'll say, I put a post out the other day about this. I said, one of the key things that I've seen over the years with really successful futures traders is that they don't just trade one market. A lot of them, the ones that I've seen over the years, myself included, you trade other markets. You're not just held by one market every day, because some markets are in play some days they're not. And I'm saying you have to go and find the market that's in play that day. But if you're there every day, you will find that the indexes aren't in play every day. And again, we're going to move to you now, Chris, and talk about what's going on with the indexes today. But like even a guy like Chris, he's swing trading, he's trading stocks, he's doing other things. And when the futures are there, he's patient. And when the play comes up, he does it. And when it's not, he doesn't. I think the problem when you are just trading one market only, especially equity indexes, you try to find that play every single day. And you might go through spouts where that works really, really well for periods of time. But over careers, it's not always the case. You're going to have periods where you may not do anything in equities indexes for weeks or months. And you have to be prepared for that. Chris, what are you seeing in today's tape coming out of the data?
So let me show the 4-hour here to see where we're at. And I'm still on December contract for this morning. So we are, NQ, we know what NQ has been doing. We broke out of this multi-day range. We started a 4-hour 9 MA downtrend, and we're now into the first lower low, lower high, second lower low. This is usually where 80% of the trends end. Sometimes 20% there is a third lower low, but that's more like the climax top in an uptrend or the bottom in a downtrend. So if we can hold here into this 24,900 area or 840s, then we can work our way back up. We did just back test resistance, which is the prior week low in the 9 MA. So it might be a little bit of a consolidation day again, because we are looking to see, are we ending this downtrend or do we make a new low? For ES, it's still, it's being supported by cyclicals. We saw financials had a pretty big run, a lot of rotation out of tech into financials over the last week. So it's holding much better. It's actually flirting with a breakdown here of this multi-day range. And we want to know now, is it going to be a failed breakdown below it, a quick look below and back up, or can we actually form some acceptance down here and then start a decline to follow NQ? That's why I say it might be a little bit of a consolidation day on top of already what it's been, because ES is flirting with a potential break as well as NQ, and we don't have the information yet to tell us if we are going to have follow through lower. As far as the morning plan here, on the hourly for ES, we had a inside that second 4-hour drop, we had an hourly 9 MA downtrend as well, and that came to an end right below 67.90s. We have now pushed up, and you can see that this bounce is right back into that range breakdown at 68.18. So now the question is, to add to my earlier comment, can we form acceptance here and reclaim it? A reclaim of 68.18 can mean that we can traverse back up into 68.43 and 68.68. But if we fail to reclaim it, maybe fail to hold prior week low as a potential higher low against the morning low, then we move lower into 67.93, where we can say, hey, is this going to be at this point a deeper higher low? And then, but overall, it's still a structure where there's like some consolidation on a higher time frame involved to know if we are going to break below this range or not. If we do not hold 67.90s on a deeper retracement, then we're going to go see new lows. For NQ, complete downtrend. But if we can do something of the similar structure here, if we can reclaim this 25,110 prior week low area, we can bounce back up. If not, this is just going to be a pretty rangeful day here inside this 24,950s to 25,110s. Either we form some consolidation and either we reclaim 110s and see higher, or we continue with the downtrend, make a third lower low on the 4-hour, and then maybe at that time we finally do see a short-term low where we can start a relief bounce on a 4-hour to daily structure. But that's what I have for today. It's a little bit of a, I mean, we've already seen the consolidation that we've seen on a daily basis, but this is has more clarity on that structure to tell us that, hey, we can consolidate today.
Yeah, I mean, the indexes, it's December in a bull market, the week of rollover, and you've got divergence in the indexes. Not a surprise to see a little bit of back and forth here. I think, two-way tape for sure. I mean, it's like, you don't have to be too experienced to know that, you've got a lot of things that are kind of keeping this tape the way it is. Again, you got Merritt trading natural gas. We'll see what else Merritt trades throughout the morning. Because Merritt, there are some other things. I was actually going to be curious to see if you were even going to take a look at crude oil. You and I have been watching that market. We're waiting for it to get a little bit lively, somewhat today. I mean, anything on there? I'm just curious if you even peeked at it.
As we've kind of talked about, I love to see crude go lower first to go higher. Right?
Yeah, I agree.
And kind of just clear out some inventory and whatnot. I'm not going to, this is not a situation for the NADRO methodology to start trying to pick bottoms. I will look for a nice little blow off type of low, really kind of capitulate. That would just be beautiful, like it did in April. And for something like the weekly time frame, or maybe a handful of days, like volume profile, market profile, put in a little bit of a balance and then start to show us I can hold back inside that balance after failing below, after taking another look, or I can start to hold above that balance. That type of what I call lower, higher time frame confirmation, that's going to be the signal, and that's what I'm going to be looking for in the crude.
Yeah, it's just not there yet. I know, I'm with you. It's like
not
I'm
even
watching
close.
it today going, yeah, exactly. All right, boys. Everybody in chat, show my guys some love. Hit that like and subscribe button. I haven't asked you guys to do that yet today, and what a show we've had for you so far. We had Mark Yusko. We had TTrades. We had the panel for the data. Hit that like and subscribe. We got nearly 1,000 people in here. Show the boys some love. It's the holidays, everybody. As Jimmy Cagg says, it's free to hit that like button. Let's get that up there for my guys. This is the last Tuesday I'll be on for this year, guys, so you guys won't be seeing me. Tomorrow's my last day, and then I'll be back the week. I know, really? I mean,
give me a break from this guy.
He's proud of me.
You're the Grinch, right?
Yeah, he loves it. He's got the green jacket on. He's coming in. Yeah, he likes coming in a little hot against me. We know. But he knows I love him for it.
Yes, sir.
I want to wish you guys a Merry Christmas, man. Merry Christmas, Happy New Year to both of you.
You too, brother.
I'll probably talk with you guys on text or anything around that time anyway. But appreciate you guys here with us today, and I look forward to seeing what you guys do. See ya.
Likewise.
See you,
Enjoy
brother.
your holidays.
Take care. It's the holiday season.
All right, guys. Just me and the Grinch now.
My wife drugged me to a Christmas.
I just heard my wife drugged me.
Not drugged. Drug me. To a Christmas show yesterday. It was Vince Gill and Amy Grant at the Ryman in Nashville. I didn't really want to go, but it was good. It was good. It was good.
Yeah.
That's pretty much how things go with my wife and I. I'm kind of like working on some like hobby thing around the house or doing stuff, and she'll be like, "We're gonna go do this." I'm like, "No, I don't want to do that." And then once I get there, I'm like, yeah, "I'm glad you took me to do this. This is good."
Oh, doing things around the house, huh? You're a manly man. Didn't picture that, but okay.
Oh man, I'm actually building my 4-year-old boy's Christmas present right now, and I guarantee you I'm more fun building it than he's gonna have playing with it. I bought this like kit of electronics components and like these Wi-Fi module chip things. I don't know what to call them. ESP32s. And I'm like using ChatGPT and I'm wiring up all this stuff. And I bought these like battery packs and I'm building him. He likes his little Brio train set on his train table he plays with. I'm building him a train gate that raises and lowers based on him having this little knife switch that he throws up and down, like the Frankenstein kind of switch.
Yeah.
And then these lights come on and it beeps as it's going down. I'm building this whole thing from scratch. It's just so much fun to do. So I hope he has half as much fun with it as I am building it.
It's awesome. Why am I still on December contract? It's just for
Good question.
planning for me. I mean, you have a better answer probably, but for the stream, I didn't want to deal with the gap because I don't back adjust. So but that's it. There's no real technical answer. No, you don't back adjust either, right?
Oh, I can't. My trading can't live without back adjusting. I definitely back adjust.
Yeah, I don't. This is an indicator that I created with Ninja, guys. Who asked that question? Kevin. Yeah, it's marking the levels here that I have through just years of looking at supply and demand and trying to identify where was support and resistance. Through their help, I was able to create an indicator. And so now it plots those for me.
What's up with this? A lot of rollover questions, a lot of back adjust questions. Look, guys, there are certainly two camps of people on the back adjustment thing. Some people are erroneously adamant that no one should back adjust. It's a bad thing to do. Those people are wrong. In trading, you need to do and manipulate your data to do what you needed to do, right? So for me, I'm looking at continuous VWAPs that persist as a form of a mean of a value type of measurement. And so if there's this huge gap just because we roll over, well, the VWAP itself, the average of the price didn't really gap, right? The market needs to be continuous to track. So you back adjust the prior expiry to meet where the current one was. And someone was asking about CVAs and profiles. You do the same thing with those. You just adjust in, let's say the roll was 20 points or 60 points or whatever. You just adjust things by that much to come back in line. But that's not appropriate for everyone. If you're a pure price action, where did the participants who were trading this new contract actually trade and actually have real volume at real prices? Back adjustment would be a negative thing for you, right? So.
Yep.
Well, this natural gas trade is super boring. I thought this thing was supposed to excite me. What's going on here, chat? It's nice that it's kind of like we had that flush into the low and it's kind of flagging here, right? I'm using a 3-minute chart. Buyers are pushing up, right? As we see in the delta, they've almost retraced all of that selling volume that came in. And there's a passive seller now that's absorbing those buyers. So I like the dynamic I'm seeing. I've got a really tight stop in here. I scaled out half at the low. Good trade. Yeah. Video Starcade is correct. Go to sleep with that position on. That'll get the juices flowing. Yeah, you're right. We won't be going to sleep with any natty risk on. It's the holiday season.
Focus on a specific market today.
The usual, man. I'll be thumbing back and forth between the S&P and gold. Not really at this exact moment seeing anything of interest. I do think that if you could have been in gold earlier during the night session and gotten this little gem, little wedge type of break right here, I know that's a perhaps a really good looking trade for your style, actually.
Yeah.
Depending on where general context was for you, but that was a really nice little play. That was a bullish contextual level for like trend continuation on the monthly and whatnot.
Yep.
So, but now, again, trade location, trade location, trade location. Trading is like real estate, right? Location, location, location. So now that we've left that area, the risk reward's not as good. It's harder to dial in exactly where to place your risk and all those kind of things. So it's, if I'll keep my eye on it for pullbacks and continuation to the upside. That's what I'll be looking at for gold.
I like that. It's close to a new all-time high, so might tag it.
Mm-hmm.
Mm-hmm. Chris, for swing, what time frame do you use for entry and what time frame to keep holding or flat? Most of the time, my entry is on the daily. Sometimes there are opportunities that you can leverage a lower time frame entry and say maybe you can go as low as a 2 or 5 minute, but that is not sustainable. So hourly, you can imagine like an hourly breakout can lead into a daily expansion. So I'll manage the trade on an hourly entry with the entry and stop on the hourly, and then I'll adjust the stop based on the daily trend that follows.
I can't recommend what Chris is talking about and what local was asking about in the chat there. Wait, no. Anyways, somebody was asking him. A lower time frame where you develop skill for your timing, your entry, your risk, paired with a contextual view, a contextual trade location, and a higher time frame, if you will, maybe a medium time frame, something like that, trade management scheme for trades that are working. It's such a beautiful thing, guys. I can't recommend that just basic building block enough. Not every single trader has to trade that way, but I can't recommend it enough. I'll leave it at that.
Yeah, that's what I want to eventually get to trade. Just focus on lower time frame entries and look for multi-day swings. But it's, an environment like we're in right now, you're not really able to hold from one night to another.
Because of the wide ranges of just ups and downs. Yeah.
Yeah, you need
sometimes,
you need a potential break. Like when we break out of this, I consider this being like a multi-month range now. In NQ specifically, yes, it's a little bit stronger, but when we break out of this, we're going to have a multi-week, maybe multi-month trend. And that's where I really look to position myself in, obviously stock swings, but also future swings. Like I haven't been able to do a good future swings since maybe August. It'll be like a 1 to 2 day trade, but where you can hold for hundreds of points, maybe 1,000 points. I haven't had that opportunity. Any swing trades I'm looking at for equities? No, I actually just went to cash because I was pretty concentrated in the semi sector because that's what was leading, right? You had Broadcom, you had Intel, you had
Micron.
I mean, I know the tickers TSM, ASML. I'm sure you guys knew that all of those were pushing up to new all-time highs while the
ASMR.
rest of the market was just sideways. So I was concentrated in that, and then when Broadcom came out with those negative earnings, I just got stopped out on. I was able to take some partials on some swings. I mean, Intel was a fantastic trade. I think I was up. I risked very little, but that was a huge trade, but it still wasn't enough. I took some stops, and so with how the indices look right now and then the overall market, it's just probably best to wait till the new year to pick that back up. When do I plan to march for ES? I trade ES all the time. I just you guys usually see me trade NQ. Oh, we're open here because it's usually leading.
March, the month. When are you going to roll over like
Oh,
sane
after
people?
the stream, guys, I'm only using December because I didn't want to deal with the contract on with the gap on the stream.
So you'd rather deal with less than half the volume on stream?
It's just for my planning. It's just it's like a.
I hear you. I hear you.
I don't want to deal with that gap. All right, so we're holding where we need to here at the open. We're creating that possible higher low against the overnight low. And now the big test for ES would be if we can reclaim 68.18, and that could push for a much higher move. Let's see if we can hold or not. Jessica, what do we do if the bigger time frame and lower time frame moves in different direction? Well, you sort of want that. You want a lower time frame downtrend into support, which is a higher time frame pullback. And so what I look to do is look to get long in that lower time frame downtrend, so I can buy the pullback in the higher time frame retracement, and in uptrends get long. That's the ideal structure for me. You know what I can do? Okay, so I'll trade the March contract, but I'll plan on, oh, nope, that's NQ.
My man, giving into the peer pressure to roll over.
It's just buying and selling it on one contract. What's
Not a lot
the
of
difference
buyers
in ranges?
present in the S&P.
Okay,
It's kind of a critical early inflection, I think, in the S&P. You know, if we look at where that lower edge of yesterday's kind of pit session volume was from, call it 75. That lower kind of ledge of that area that we continue to just hold. That's kind of what we're retesting right now into today's pit session high. The overnight, obviously on the news, took a peek into it and failed. So to me, that's a really nice inflection if for those of you trading the S&P short term. I'm watching as usual market profile. So that's what I was talking about, this A period test up into kind of that lower edge of where we traded, not only, this day, but, if we could merge these 2 days actually. There you go. So it's anywhere from 69 to 75, that kind of little spot right there it's a really, really good inflection.
Yeah, that's actually the back test of the overall consolidation support. So we tested it from the underside. We had a small peak above and failed, and we just tested
Sellers
it
in
again.
control of the tape. Yep.
Maybe cyclicals are weaker today. No. Let's see who wins this battle.
Ooh. My students might call me out. I missed that little false divergence actually in the order flow. We had a real tremendous lack of buying on the retest into the highs, and the selling itself off the highs actually more normal. So my apologies. A little bit of a false divergence there. Just shows how easy it is to miss those. Always go back and find out where did things go awry.
Get better. All right.
Yeah, I am. As we speak, I am. Get good, son.
All right, so a failure to get above this 75.80 area will push us back up to 68.43, which is 67.93 for December contract that I'm watching. And right now we're just in a multi-hour consolidation, but I still see some strength here. NQ's leading, first time in a few days. Well, leading higher. No real structure here for a long opportunity. We're about to test that prior week low, which was support. Now it's resistance. Let's see if we can hold and form some acceptance. But we did just hold the hourly 9 MA on this recent pullback. If we can continue to hold, we can see much higher. Wow, software is pretty strong in the market, helping NQ lead.
Order filled. Order filled.
Trying to cheeky little S&P short here.
I mean, like software, the sector, like Shopify is very strong. IGV, strong, open. ES is not really doing much. It just tested. That was a good short. It just tested that 75 area again, failed.
Sellers really showed up on the tape, so
Yeah, this is sort of like our range here this morning.
Wouldn't be surprising to see it take out, 68.60, just run some stops at the lows as it's kind of ranging around, failing to get across that key line in the sand that I'm looking at. So risk reward skewed in my favor. Order flow looks good for the downside. Put a little risk on. Flip the coin, see what happens.
Sprinkle a little risk in there.
Sprinkle a little risk. Like Salt Bay kind of risk. Just kind of sprinkle it.
Just
Wait, was that his name?
Yeah. That was good. Into the bottom of this recent range. Let's see if it breaks down and gives you follow through. And then if we do, we might go for that London low. NQ rejecting off that resistance again up here.
Scale some.
ES is
Hold a
wedging
VWAP.
up.
Run them. There it goes. Ooh, but they just keep kind of running out of
Yeah,
energy down below there. Scale some more.
it'll break if NQ fails here. It's trying to create a higher low.
There's the breach of 60.
Order canceled.
Flat. Thanks for playing.
That's
Just
it.
taking a little nibble there. That's not, it was not some type of, big structural thesis narrative kind of play. It was really literally what I said when I took the trade. It was risk reward skewed in my favor, short-term reference, not a full NADRO type of stuff. Short-term, good line in the sand, 2-day value. A bit of a lack of buying, even after the false divergence. Post that, a real lack of buying on that last retest. Seller slammed it. I joined them. Little stop run through the lows. That's just a little trade, right? You can have little stuff like that for a short-term trader in your playbook. Not everything has to be a home run. Not everything has to have a runner, right, that you hold for a long time. You can take base hits. You can do stuff like that. It's the holiday season. Yeah, different styles. Full Gluten says home run or go home. I like the sound of that, but I like some base hits.
All right, let's see if I gotta close this. Managing what's left of the swing book. All right, so we made it into support here. NQ's still pretty flat. We don't see here, but there's a support here. 67. What would be this? 67.93, 68.50.
Yeah, we got news coming out here, and as they say, dos minutos. PMI. And then that'll be it. Merritt, how to stop the hamster wheel of looking for holy grails / adapt strategy to recency bias. I have to believe that anyone who knows enough to ask that question deep down in their heart already knows the answer to that question. I have to believe that. And so I want to encourage you. I bet you know the answer. I can talk about it, but I just want to say that first. Tracy says PMI at 51.8 versus an estimate of 52.1. That's flash, manufacturing. Services also lower than expected, 52.9 as opposed to 54 estimate. Do I even know what that means? Not really. Not really, chat. PMI. Price manufacture. So is that like an inflation measure almost? Like prices? Are prices high or low? Tracy!
Meatloaf. All right, let's see if we can form a little bit of a lower low, lower high here against this breakdown in NQ. Yes, it's
Tracy!
still into
Ma!
some support
Meatloaf!
here.
Come on, gold. Be tradable.
Yeah, NQ is going to stay range bound. So this could be the higher low against the overnight low. Look at
It's a
that.
good
big
reversal in
bounce.
the S&P. It's got teeth.
Yes, back up above prior week low. Pretty big one. We have a good higher low now against the overnight low for both ES and NQ. Now to see if we can form some acceptance here for a long, for me. But we're still range bound, so no rush. This could be a good
Mm-hmm.
low.
Mm-hmm. Feels like one of those you almost have to just buy. It's not gonna let you in if you don't just lift it right here.
A lockout rally, as they say.
Mm-hmm.
I still need to wait for a way to manage risk, as they say. You need to manage risk on your ideas, on how you frame your ideas. And if it goes without me, then you have to let it go. Or else, how are you able to manage risk on that idea?
Tracy says, thank you, Tracy. Manufacturing PMI, new orders, production output, employment, delivery times, and inventory levels. Interesting. And then they average all of those different factors into one score, evidently. But then probably they put the data out on the more granular category level stuff, which might be like more or less important to certain people. Anything above 50 is expanding. Anything below 50 is contraction. We learned so much here. Awesome. Thanks, Ma.
That was a good test of support. ES back above prior week low. NQ held that. I mean, I'm looking at the December contract here, 24,950s, which was support. So for me, who is a directional or trend sort of follower, this is still a range-bound market, and I need to wait for some acceptance. And there was also no 9MA reversal. The setup I look for reversals. This candle here, it just went right through the 9MA. Typically, I want to see a low, lower high into the 9MA, which is in black. And then that sets up my entry for a reversal. But you can see this candle went all the way through, almost to the other side of the range and closed up here. So I can't, I can't possibly think of taking a long up here and then a stop down here when it's so close to the top of resistance. Oh, look at that. Yeah, that was a good higher low. So now I need to wait for some acceptance here for a long, and that will be a little higher low that holds. And if the higher low holds, then I have a setup long. But we're following scenario 2, which was a pullback into support for a higher low and then bounce. So as long as we continue to hold, we can see significantly higher, especially if ES can reclaim the 67, 75, 80 area, which was prior support of the prior range. And now we are sort of chewing through that supply the more we test it. Takeaway says he's learning more words from Merritt. Except that I just missed the move. That's funny. What
Accept
move?
it.
What
Accept
move?
it.
There's no move here.
The move off the low. Just accept it.
That's like a scalper's move. I'm not a scalper. I'm looking to hold for longer than 15 minutes. There's no.
He could
trend
say,
here.
I missed the move. I missed it. But I was respecting acceptance. We're below that line in the sand, so I wasn't looking. I took the short. I caught the down part of it. I was not interested in the up part of it.
And we get these sort of ranges all the time. So, and I share on streams that I want to look, what will be a change in character here? Because you just have move to the top, rejection lower, move to the bounce from there, right? So we're ping-ponging back and forth. So what would be a change in character from a price structure perspective? Well, instead of a rejection all the way back down to the bottom of the range, would be if we can actually now create a higher low, create a little consolidation, acceptance, wedge, whatever you want to call it. That'll be a change in character. And then that can set up the move. It can fail after that for sure, but that is then a way to manage risk on a directional trade away from the consolidation. And I think TTrades calls that as a, what does he call that? When there's like a higher low, I forget. But that higher low would mean that buyers are stepping up from where? From down here to up here, and they're not letting sellers push price back down. And that's, what it piggyback on, and then look for my entry to manage risk on the long idea. But until then, if that doesn't happen, then price can go all the way back down to the bottom of the range. And it's a what I call a scalper's paradise, where he's just riding this, what is it, a 40-point move? Oh no.
I'm not gonna lie though, there's kind of a lack of aggressive buying on this up move post news. It's not the totally death, but it's a little bit lacking, a little bit
Protected swing, that's what he calls it. Yeah, good. Yeah, thanks, guys. Not CISD, but it's a protected swing because how I see it is buyers protected here. They created a higher low, or what he says a swing, and then that sets up to move higher. Now, of course, it can fail after that. Totally, you don't know that. But how can one manage risk in how my approach is, well, a change in character. And that would be a higher low holding versus ping ponging back and forth. So we have a potential higher low here in NQ. Now we want to see if it can hold and then set up to move higher. So that's I wanted to see that hourly 9 MA hold. If the next candle breaks above this candle's high, then I'll get long, and then I'll see. But it's I'll see if it can let's have some continuation.
almost a quarter of normal volume. Definitely not the S&P. The S&P is kind of doing above average volume so far.
Okay, so we have the 9 MA higher low in place. Okay, let's see if it can hold and push out. If not, we'll take a stop. Can I move my...
Merritt, do you think delta and the shape of a candle, aka effort and result, could be a good timing entry thing or too much noise? I have some traders who lean heavily on the actual delta, and obviously relative to the candle matters, because like just as you put it succinctly, effort and result. I certainly have traders who do that. I'm not one of them. I certainly like, as you probably heard me say when I was hitting into that S&P short earlier, the sellers were really slamming it. It's not something I'm using as a timing tool, but it is something I use as confirmation.
All right, we can see that. All right, so far we did get a change in character here in NQ. We created the higher low. That was supported. And now we're attempting higher. Now what I want to see is a continuation. And if not, then but so far everything that I wanted to see on higher time frame is there. We had a pullback into support. We created a higher low against the overnight low. And now to see if we do get followed through.
Next areas I have for the S&P are a 93 to 97 range.
I have now, if we can really reclaim the 68.18 or the 75.80 area, would be 68.43, and then I would say 6,900. What do you have? What did you say you had?
68.93 and 68.97, that kind of range.
Yeah, I would
Upper
say
68.90s.
yeah. I would say I have something at 97.
Yep.
We also have the weekly open at 88. Kind of
I
slow
liked
here.
your long. It just doesn't work for me in terms of how I use like the VWAP bands and whatnot. It would kind of put me getting long. Like I kind of think this market is heading to 68.90s. That's kind of what I think it's trying to do right now. But it just wasn't a great place for me to buy personally because we're rotational on the day and we're at the
Yeah.
upper end of that rotational range with these VWAP bands. So for me, that's just again, I would have liked the Merritt inside me would have liked to have bought this with you, but as I tell my students, my process is a better trader than I am.
Yeah, that's how I feel about when I create my morning plans. The plan is a better trader than me.
Mm-hmm.
What did you ask? Oh, somebody said we're not answering your question. What was your question?
This guy keeps talking about how the volume's too light. He keeps saying it. We're at like
There's
over
no volume
above
because
average volume,
top
even
step is
during
down.
rollover in the S&P. It's great volume. We're good.
How do you feel about this? There's no volume because top step is down. Isn't that a
There's no volume that derives from that.
I know.
There's no sim volume coming through. Oh, it was a joke. It was a joke. He's on the level with it.
Oh, okay. Don't kick him out, guys. They were about
No,
to
no, no,
kick
no.
you
He's
out.
good. He's good. He's
Yeah,
cool. He's
let
with
him
me.
stay. Let him stay.
He's with me.
Yes, big traders are done. All the big traders are are done. Yeah, ES looks like it might stay rotational. NQ, if there's no follow through here, then it will stay rotational. But I did what I had to do. We had the protected swing, the higher low. We pushed. And so if we're not going to get that follow through, then the trade is done. Yeah, I don't like how.
Tough trading in natural gas. As you guys recall, I was in the short here, scaled out into the low, and then scratched the remainder for a small profit from wherever I was in from. For me, moves that continue to go all the way to VWAP and then kind of range expand or try to trend, that's a tough environment to make money in. So no longer any interest there in the natty.
All right, I took it off minus point, I think 6R. I'll have to look at that later, but there was no follow through and I don't want to stay involved in. Almost hit 1R for me. So I what did it hit? More like 0.8 R.
Absolutely, Dub Monk. Dub Monk. Would you still trade today or this week if it wasn't for the stream? Absolutely. Again, guys, we have good, healthy volume and good volatility, good movement. You know, we're moving 20 handles at a clip here in the S&P. Are you guys insane? Were you guys not trading in years past where you don't get this type of, you get 10 handles in a day? These are, I think a lot of traders who have come up into trading post 2020, they don't understand how good conditions are. And a lot of smarter, more experienced, more veteran, more wisdom guys than me, they are constantly harping about how good conditions have been and continue to be for short-term trading. And that could change, guys. That things could go back to what I would call more long-term normal. And you don't have these kind of volatility ranges and intraday movement. These are good times for short-term traders, and you really should kind of have a mentality of making hay while the sun is shining, so to speak. Hey, KTS. AQ says, thanks for the FOMO, Merritt. Merritt.
Pushing back up. And Q, at least, yes, it's probably range bound now. Still, it's going to stay until it attempts a push back up. Ooh, Tesla pushing. It's so close to all-time highs.
Oh, I want to buy it. I can't do it, man. Can't do it.
It held, yeah. But it would have stopped me out if I stayed in it fully. So I'm glad I took it off. And now I see if there's does want to go higher here.
Oh yeah. It's just not it's good selectivity for me to not chase that location right now, but sometimes you have internal conflict, guys. It doesn't matter how good of a trader you are. You really see something as you get more experience. You have that intuition. You kind of see a couple of factors, and you really have a good read on what the market's doing. And it's just not a trade for you, and you got to exercise that discipline, if you will, which I don't love that word for traders, but there's certainly some of that.
If ES can now create a little bit of the similar structure, a higher low to create a changing character. So far, it has continued to be a little bit of a range bound. So if we can create a higher low, then it can set up to push higher, and Q will lead.
Gold finally gave another algorithmic long signal there. It just, like I talked about with what's the potential play in gold? It was some kind of a pullback to get long to join this move, but it's like that was more of a pause, more of a little stall. It was a flaggy, that's good, but would have loved to have seen something more like what we saw earlier pre-market. Didn't get it.
So when your question on what you're viewing, like in here in NQ, where you're saying that you do want to get long, and we both see what's happening, but what is it that you're seeing maybe on your side of things through the order flow that is telling you, hey, the weight, how you are allocating into a rotational day is higher because of why?
It's not that the weighting of what I call the intraday condition, whether we're rotational or trending or whatnot, it's not that the weighting is different than normal. My point was that it was a usual heavily used resource and tool for me. And it was not, it's simply, I look at things that are mostly inside this zone from this band here to this band here, right? That's what I'm using. And so as obviously the bulk of today's trade since the open has been inside that. We've only taken small little peaks outside of it on both ends now. So when the market is in that condition that we call rotational, the play is to actually play mean reversion. Now, we don't just look at what the intraday condition is and take trades based on that. That's not how we trade. There's a bunch of other factors that lead us into using this as just an execution tool. So I would prefer to have been long once we put in this excess low down here, and then started to stabilize a bit back above that kind of area that I have from higher time frames, right? This kind of, we talked about it, the profile lows. But the problem is now I have a problem for my process. I would like to buy here, or I'd like to buy here. You can see my algorithmic signals firing off for potential long points. But it's at the upper edge of this rotational intraday, so there's dissonance. There's a problem. And so I have to kind of pass on that. Unless the conditions were A+, then and only then would it be acceptable and even prudent to make exceptions around some of my execution stuff. So
Thank you for that. Really good info, guys. Chris, you were right on the consolidation call. Yeah, the higher timeframes did suggest consolidation if we couldn't reclaim the breakdown, right? That's 75.80 on the March contract, and then the 68.18 in December in ES, and then the prior week low 25,110s in NQ, which is around, let's say, 390s 400 on the March contract. Does it mean that just the entry was too fast and you didn't take it in the middle of the opening range, again, to avoid FOMO? I don't trade the opening range, so that's a separate sort of answer. Was my entry too fast? I wouldn't say so, because everything that I was looking for, we created the higher low against the overnight low, right? So that's like check. If I had a checklist, that's one. Check that off. Then we had a change in character, meaning that we weren't just ping-ponging back and forth here. We actually had a higher low at the top end of this range, and that is a buyers showed up, even though it failed. And I said, look, it could fail later, but buyers did show up from down here to up here, and they created that higher low. So part of my plan was to look for higher, because we could potentially see a push up higher as long as we had a higher low. We had it. I took the trigger long. It didn't, we're still rotational. So I wouldn't say there was anything wrong for my trade, or was it early? No, because we could have just continued rallying nonstop higher. but we're just not having any follow through to both sides. And then I say range bound, guys, because if we look at the hourly structures here, I think most of you guys know by now how I track trends. When we start a downtrend like we did here, and you have your low, lower high, lower low, that ends, right? And when the 9MA trends on a certain time frame, you now have a mean reversion move back into, let's say, the 2050 EMA. And then from there, we start a wedging structure, right? Which is something like this. And you know what? I can actually share something else. Let me see here. Here you go. So when the 90-day downtrend ends, you have a move into the 20 or the 50 EMA, and you start a wedge contraction. Let's see if there's another one. Stop it. Something like this, right? But it's a consolidation. It's a wedging structure. That's what we pretty much had on the structure that we have on here on the hourly. So we held the pullback. We created the higher low. We had our swing high, and that could set up the consolidation, which is what we're getting. And we're now getting this sort of possible wedge structure on the hourly. So that can be multi-hour range until one side breaks. So all we're seeing that is that hourly consolidation. But after an attempt higher, now maybe ES can lead lower. Unless we hit 93 again or 845 and bounce back up. Yeah, no strength for follow through on either side at the moment. You have a little bit of a mixed market now. You have software that was trying to hold really well. So now if this recent low in ES fails to hold, then we are going to go down to new lows. So what I'll be looking for is if now we do have a decisive break of this range, and let's say we're not going to be rotational, then I want to see acceptance at the lows for a directional trade idea for new lows. If we don't get that, then we're probably just going to bounce back up and stay rotational. But that's rotational markets this tight are not something that I focus on. So I can't trade this.
For me, there's a big difference between a range bound session where volume is super low, the speed of tape is super slow, versus this. This is not that. This is a nicely trading range bound session with volume and whatnot. So there's a big difference. And so I just want to point that out to people. Just because a market is sideways on a session doesn't mean that it's dead and shouldn't be touched, or obviously it depends on your strategy and what you're trying to do. But I think that's an important distinction.
Yeah. Just have to know yourself.
There was a good question earlier about how do you come up with a DLL, a daily loss limit. Shouldn't be too big, so it demotivates. Also not trigger too fast. I'm a little, I come from a specific place in the trading landscape, which is the prop trading space. Real prop trading space. And, we don't have account balances. So we don't use like, oh, I'll risk 1% on this trade or whatever. We don't have an account balance. Prop traders have a relationship with management that determines how much size you get to trade. And then you have essentially two variables that you have as a prop trader. You have a max loss limit where you lose your seat, and you have a daily loss limit, which is how much you can risk each day. One of the benefits of trading prop is that the firm works out a lot of those things for you, so you don't have to kind of reinvent it. But I'll help you guys reinvent it at home. You need to, first of all, you need to start small. It doesn't matter how much potential size trading account you have. You start small. Well, first of all, you start on sim. Prove yourself on sim, get good at execution, all those kind of things, managing risk, and then move to actual live trading. Start small. Start with micros. And the math is kind of, what's the minimum size with the smallest product, right? Micros that I can trade. Okay, I need to be able to scale out to trade well. So, okay, I have to trade at least 2 contracts. So 2 micros of this market and that market if I'm trading those markets. And what's my general average, or on the long end, the large end of my stop distance? Okay, for 2 micros in this market with a larger stop distance of this, that means I need to be able to risk, let's call it $200 a trade, right? Or $100 a trade. And for me and my style, the proverbial me, I'm saying you guys be introspective and ask yourself this: how many trades per day do I need to be able to kind of do what I need to do? For some people, that could be 1. For other people, that needs to be 10. So you take whatever that trades per day number is, and then you multiply that by that risk that you need to be able to take per trade, and you arrive at a daily loss limit. And hopefully that daily loss limit fits within whatever constraints you need to work with financially or from a firm or whatever. But that's how I like to back into it.
Okay, so we are. I mean, ES is back into that recent low.
Sellers remain dominant on the S&P tape.
Yeah, so what we want to see now, or what I want to see, is if sellers can now have the strength to move lower from here to here on a potential bounce to change the rotational structure. We create a lower high against the breakdown, and then that sets up the move lower. So I'll short that if that happens, but because now we have made a new low, or else we're just building some sort of megaphone structure here, and we bounce back up. But we're living inside the 4-hour lower low, lower high. So this is just a 5 4-hour candle consolidation. But it's a wide range, and that's why Merritt says that this is a tradable range, because you're getting good moves here. So if you're, the typical trader who is short term, then you should be killing it. This is your sort of environment to thrive in. I am a higher time frame trader, so I need trends. Merritt can call me a trend follower all he wants.
No, I'm not pulling up YM. Sorry.
Uh, I haven't, but I want to. Maybe that's a goal for next year to start looking at market profile or something, that Merritt looks at, or the order flow guys. It's good stuff.
Every year, I typically around this time, heading into New Year's, part of my annual planning and something that I do is I pick out one person, and I reach out, I get their course, I sign up for something, and I learn from them. Sometimes I'll do it anonymously so people don't know it's me. But most of the time, I just do it myself.
Hey,
Um,
was Dancing Kitty 69 you who reached out to me? Is that that you said anonymously? Hmm. It makes sense now with the whole cat meme that they did for you, that would be your username.
It's yeah, yes, Anon. It goes much deeper. The
Hmm.
plot goes much deeper than we ever imagined.
Okay. So that's him, guys, right? If you get a message from Dancing Kitty 69. All right, well, there's no acceptance here. There's no consolidation here for me to look for an entry. So I can't, and this is a good example of how others may be shorting it and they're making their points, but I can't, because if I take a short here without my process, well, what if I'm shorting the low and then it bounces back up like it did earlier? And then I just take a stop without a way for me to manage risk. So I have to be okay with missing this drop since my entry rules weren't there. But awesome short if you guys are in it. So now let's see how a bounce potentially looks for a lower high, and then I'll look to engage there. Because at this point, we're going for new lows. When do you get out? That should be part of your strategy, knowing when to get out of a trade. Look at that, beautiful. I think we're seeing now finally, yeah, banks are coming down, small caps. So cyclicals are coming down, and they're hitting yes, much harder. No bounce.
Crudele, what the person I sought out to learn from this year in 2025 was Jason Shapiro, and so I learned about how he approaches markets and all the COT stuff, which I didn't have any experience with. I so that was who I learned from this year, and it was
As a
it was cool.
course or something.
No, not a course. No, certainly more of just a community and a more of a real time and like a weekly when the numbers comes out, he's putting out um a recording of himself analyzing it, and they have their custom metrics of identifying what markets are crowded versus which ones are not, and kind of those type things. And yeah, I enjoyed learning.
Did it help you?
It's not something I'm implementing. Um, it's certainly something that I have a lot of notes on, and I think could be really cool for pure swing trading. Actually, Chris, I think
Yeah,
that
that's what I was gonna
it's
say.
yeah. I'm just so focused on short term for the most part that COT data becomes, tough to implement. But valuable, valuable stuff for swing trading, I think, for sure.
Yeah, I like his stuff.
He's a contributor on the channel here. He pops in from time to time.
Yeah, he has a no, you know what? I think he does have a course on with TraderLine, which is a swing trading educational platform.
Okay. Nadro course versus scalping, it just depends on the niche you want to settle into, right? If you want to do things like swing trade or intraday position trade, where you're really focused on context, trade location, directional bias, what the market's doing, and you want to get in trades and kind of hold them for the most part, that's Nadro. If you want to really focus on the nitty-gritty of the order flow and essentially be very short-term type of trader, then the scalping course will be better suited. What do you think about this here, Chris?
I think if we bounce back up, NQ will remain rotational. I'm watching ES to see if we create a lower high up here and then start to form acceptance. If we can't sort of reclaim 50 to 53, then we're going to set up for a move to new lows. Or did it make new lows already? No? A few points away from the overnight low.
Looks like the S&P tagged the overnight low to the tick.
Really?
Mm-hmm.
I see it as a bit higher. Let me see.
32.75.
Oh, it actually made a new low. Or you have it, yeah, I have it at 32.50. Okay, so this is where we see, guys, if ES will continue lower. If we create a lower high on this bounce, then get a little bit of consolidation. Same for NQ, or do we continue the rotational structure here in NQ and then ES bounces back up? But from a I mean, I feel like structures like these are better for you guys because you guys are looking at something outside of charts and you can see it on the tape and say, okay, I'm getting in, right? When someone like me is waiting for specific entry rules to happen. So that's what I like about your guys' approach and yours is that you're able to see something else, and that gives you the conviction or say, okay, this is the area that I was looking for. This is what's showing up and I'm engaging here. And that can be like 30 points before I engage on the same idea.
Sure.
But then what I like is that I know how to hold longer than most of you guys. So my own curiosity is, well, what, I'd like to learn from you guys so I can identify better entries and then focus lean on my trailing approach where I can just hold longer.
I do think there's this concept that's really important in system design that there is some matching up between entry signal and duration of hold and whatnot. So I know that sounds opposite of what I was talking about earlier on the stream about lower time frame entry and timing and risk versus medium to longer, kind of for holding. But the reason you go to order flow, the reason you go look at some lower time frame execution type stuff should come from some of the stuff that's more connected with the longer time frame hold stuff. Does that make sense? So like you don't just stare at the tape all day and place trades from it, or at least the style I'm talking about, we don't. You have moments and reasons where you look to the tape to get confirmation and to apply entry.
Yes.
Yeah, because you got a reason to go look at it. That's
Yes.
super, super important. Just blindly saying, yeah, there's an order flow signal, let me buy the S&P and then try to make it a swing trade with my trade management. That's going to be really frustrating to put it mildly.
I think that's what a lot of people find challenging, is that they're always, you hear it from them saying, I feel like I'm trading against the trend, because they see something and then they get in and they don't, something happens where they get stopped out a lot. Or I hear a lot where they say, well, I can't hold overnight. Well, to me, it's like, why can't you? If you're trading with the trend and you buy a lower time frame, move lower into a pullback, from that perspective, you should be able to hold overnight, because you're trying to be in a higher time frame move.
Yeah, that's one reason why some people start to get into basic plain options. You don't have to get super nerded out with all the Greeks and you don't need to be getting into Vanna and Charm. But if you're uncomfortable with overnight futures risk, options are a beautiful place to do that. If you just want to buy options, right? Buy a put, buy a call for that directional exposure, you're going to have to play against theta, right? Time ticks against you, as every single day that trade doesn't work, you're losing money. You can really reduce that effect by just getting some basic vertical spreads, right? Either buy them. If you're long, you can buy a call spread, or if you're bullish, you can buy a call spread or sell a put spread. And you can actually really, really reduce and negate theta being against you, which is time decay. So even get it on your side slightly, right? So it's a great way to help you sleep at night and to hold overnight.
Yeah.
Calendars I don't like as much. I'm sure some of you know a whole lot more about options than I do, but verticals are much cleaner, and you eliminate that spread risk between expiries, which is not a big deal for the S&P, but it could be much bigger deal for some more of the commodities. So for me, order flow kept me out of a short trade here. Talking about order flow and whatnot, that was a lot of buying off that low. That was not some weak buying that, by the way, I've been talking about since this market opened. Weak buying, weak buying, weak buying. All of a sudden, we got a lot of buying off that low. And so I was, again, kind of like disappointed, to be frank and honest with you guys. You may have seen my reactions. I think while Chris was talking, I remember I like rolled my eyes or did something because I wasn't rolling my eyes at Chris. Usually I am, but this time it was at the market. Because I was interested in actually a trend continuation short type of play, because we got so far. So go back to my intraday execution. We got so far outside of this band area. To me, that says downtrend potential. And so I wanted to short the pullback into this area, into the, near the -1 development value area low, to look for this continuation play. But I got called off of it because of how strong the buyers were coming off that low. So yet again, for me, a little bit of a frustrating session because I keep getting conflicting signals at areas. I want to buy, DVA doesn't allow me to. I want to go with the trend continuation short, order flow says not such a good idea. So it's been a good day for me. Tiny account here, up $1,100 between the two trades I've taken, the short in natural gas and then the short in the S&P. But it's important that you guys at home can follow along a session like this for me. Yeah, I'm 2 for 2. I took 2 good trades, but it's been mostly a frustrating session. I've been mostly saying, oh, in my gut, I want to do this. I see the potential for this. and then my process is not really letting me do it. And that might be frustrating for today, but big picture over the next 100 trades, over the next 1,000 trades, it's a good thing. It's a good thing, and you gotta remember that. It's part of being a pro. Well, crude oil, as you should know, gold very often gets very disconnected from its delta. Gold is very often not purely aggressively driven in terms of its price movement relative to delta. So you do see days like we're seeing right now where what's driving gold higher? A passive buyer. Sellers continue to hit the bids. Passive buyers are absorbing that selling pressure, and gold continues to trend higher. Gold is presenting kind of a second chance entry at getting in on this long signal here. Yes, do I think that recent highs in gold are vulnerable? Yes, I do. I think that there's juicy stops up
Wondering
here.
if we stay rotational or get that breakthrough. NQ needs to break here. If not, we will remain rotational. My entry was a little late. Should have been 2 points higher in ES. If we can't break down NQ, we'll remain rotational. We'll move back up. Yes, it's leading the move lower. So now it's to see if we do get follow through.
Crude continuing its downtrend for the session. Look at that. There's an example of passive activity. Holy cow. So crude, like gold, likes to do things like this these days. Pretty funny. That is a massive passive seller in crude oil. This chart down here, you don't need to understand everything about it. You just need to understand when it's going up, that means people are pressing buy market. That's what that means. So you have all these people slamming buy market. Well, why isn't the market going higher? Well, that's because the resting offers are so strong and continue to even step down, like tripping over each other to try to get filled. And you have a market that's going lower on lifting order flow. It's always interesting to watch. Not my favorite condition to trade, but it's always fascinating to see when that dominant passive behavior is driving a market. You see it more often in certain markets than others. It's less often that way in the indices. You will see days where that is the case, but it's less often than gold or crude. And that's part of like me and Crudele were talking about earlier today. If you are order flow heavy, part of understanding that personality of a new market and things like that is understanding, does it behave like this a lot, or does it behave more normal like equities might?
All right, so I'm off near break even. No follow through here, so we are going to remain rotational.
Huge. So we saw strong buying off the low in the S&P. We saw super weak selling as I was over looking at gold into the low. So now I fully expect, if that pattern continues, some kind of a reversion back to VWAP, things like that. Leo, maybe check out my Twitter bio. We got some links and stuff in there. Places you can learn these things.
Yeah, I adjust my stop for swing trades based on recent swing structure. Yes, it's based on swing structure. On swing higher lows if it's an uptrend, or swing lower highs if it's a downtrend. Thanks, Darion. All right, so rotational LB. No new lows for ES. We remain in that 4-hour multi 4-hour candle range.
I couldn't tell you why any buyer or seller is doing what they're doing, Mr. Monopoly, but different traders and different participants have different styles of trading. They have different algos they turn on or off. Some are a passively driven style. Some are an aggressive style. One of the most common styles, and what we might be seeing in some of these passive driven markets is you can have an algorithm that looks for a certain amount of displayed size that the trade direction you're trying to trade is showing. So for example, if you're trying to buy, you have an algorithm that's looking for any time the size on the offer is above 100 contracts. And if it sees that, it takes it for you, right? Fill or kill order type. Probably most of you, and myself included, have never used a fill or kill order type where it says, hey, you either give me that 100, or if I was a millisecond late in trying to reach it and it gets pulled in between the time I see it and try to take advantage of it, they're taking advantage of liquidity. So if they're wanting to buy, it could be an ETF that has to buy. It could be a fund that's bullish. It could be someone getting out of a short, given how far things have come down. They're buying it to exit. We don't know, and we'll never know. But the dynamics I'm talking about with these order types, with algorithms that look for liquidity to hit it, that's real stuff. That's leads to these patterns that we look at and whatnot. Yeah, TT has some good built-in algorithmic order types, and so does Interactive Brokers. Have you ever used any of that, Chris?
Interactive Brokers?
I'm talking about their algorithmic order types. You can like split up orders by random number of milliseconds, between this and this range, and it'll fire them in for you. Like, have you ever used any of that stuff?
I have not. No. I know people who do. There's what is it called? There's a big one that's used in the swing trading community. I forget.
Like one of the order types, the general algo
Yeah.
methods, like
Yeah, it'll
people
average
VWAP
you
in or
in.
TWAP in,
Yeah,
or
VWAP in. I think that's what it is.
yeah, that's certainly the most vanilla way of doing it, but very, very commonly used.
But the people I see using that are trading
Huge.
50 to 150 million.
Yeah.
There's a lot of money out there on the swing trading side.
Oh yeah. It's got more capacity, right?
Yeah.
You can't intraday you can't short-term order flow trade a $1 billion fund. You can't do it.
No.
There's not enough people to take the other side of those trades, and you end up exposing yourself because you can't hide. You're the biggest player that's in that time frame pushing things around. You never want to be the biggest player in your time frame. You never want to buy the nicest house on the street, right?
Yep.
Yep, that's true.
Yeah.
REI chief. That's a great store. You ever go to REI?
Yeah.
Love that place. I'm a card carrying member.
Same. I go get my snowboard wax there every season.
Are you a pretty good snowboarder?
Yeah.
Nice.
I grew up going. There's a mountain 2 hours from me. My snowboard. Yeah, Big Bear. Big Bear's 2 hours from me. Go to Mammoth too.
You snowboard in Mammoth Cave in Kentucky?
Hell yeah, brother. Hell yeah, brother. Yeah, Heavenly is really cool. That
I've been there.
you went to
Tahoe?
Heavenly?
Yeah, Tahoe. Yeah.
Yeah, it's beautiful. Yeah, I love Breckenridge. There's no snow here at the moment. It sucks. Mammoth looks like Big Bear. I'll say that. And if you're in Cali, you know what that means. All right, so NQ's back in the range, rotational. Yes, did see a new low for the March contract, not December.
Buyers in control, I think. I thought about buying a second ago. Probably should
No,
have,
not
to be
in a
honest.
position here. You'd be able to see it if somebody was in a position through this position tracker that we have. Oh, Star T lives in Tahoe. Just go trade in the morning, go snowboarding, skiing, whatever you do. That's the life there. Trade the first 2 hours and then go ski. $15-minute looks it's range bound here in NQ, but it's setting up a move here soon that I'll be looking for after the stream to participate in. But it's something's coming.
Yeah, you can absolutely incorporate seasonal stuff into some of these commodities. Absolutely. There's real incremental layered edge you can add with
Yeah,
that.
why
Obviously,
wouldn't you?
if the hold time is adequate, right, for super short-term trading, it's not impactful, but absolutely you can do that. There's some really good services out there that offer some of those run those calculations for you and give you some good analytics to go through and lean on.
Our action's looking good here. Let's see if we can now hold, create a higher low, and set up a move higher. That was a very deep test of the lows for ES, while NQ held much better.
You know what this level is that we're bouncing off of? The overnight low and today's low is
In ES or NQ?
ES.
Uh-huh.
It's quarterly VWAP.
Maybe they hold it above it until year end.
I'd rather see a deeper pullback. Be probably more better trading conditions, but yeah, who knows?
Good
What's up,
morning.
guys?
Morning, gentlemen.
Good morning.
Chat, you guys are crazy. Um,
How are you guys doing?
I'm doing all right. I'm doing all right. I
You are.
Chat thinks too highly of me. I was not. I am and was not long.
Yeah, I've been watching this yesterday when I was on the stream. I mentioned 25,000, 240s was kind of the zone I wanted to trade off the open, and we got it. We got a bounce, caught that morning move up, but didn't take enough off. I thought we'd break out of that top side of the range. We just fell right back to the 25,000, 240. So that's kind of what I'm watching here the rest of the day. And if we crack it, then we'll see how far we go. But lower lows and lower highs right now to keep it simple.
Yeah, I actually got short NQ around the 274s, I think. Covered around those lows, right on top of 200s when they kind of failed to poke through. So chat, I know I was not long. I was actually on the wrong side. I was short. But it was a pretty good one. I mean, it was a quick like 70 something points. Lots of buying. I think Merritt was noting that huge, huge buying. Um, but as soon as I gave a second attempt, they just they got stuffed. So as that happened, I just got short with it, and then was a quick one. Unfortunately, it didn't go lower. I was looking for lower, but we'll see. Now they just formed a whole reversal off of a higher low, and that's the sequence. So too late for me to get long, and I don't want to short this anymore. So we'll see what the next hour gives
Order
us.
submitted.
I'm not extremely tempted to take another trade after the last one, but I do wish I was long instead. That's for sure.
Saw you watching Oil America. Nice. New lows of the year in that market at the bottom of this daily channel I have. I was hoping we'd get some bumping around 55.20. We just crawled back into that level, but down 2.5, over 2.5% today on new lows in the year in CL. So that market's been interesting, but definitely a tough short as it was just water falling down. I noticed you pulled up how we were seeing nothing but market order buys, but still moving lower. I thought that was interesting. That's not an indicator to watch. So you showed that. I thought that was interesting.
All right, guys. That's it for me. Merritt, good sesh.
Yeah, brother.
See you,
You guys
homies.
take care and enjoy this range and see if we can break out today.
It's definitely a range. See you guys later.
Later.
Later,
Adios.
chat. Later,
See ya.
guys.
Yeah, the short didn't really collapse, but I did note also that it was a ranged profile, and so I covered everything. So I'm happy about that. It was the market just kind of slid down real quick. It was a 50-point TP1. I'm up what I'm definitely happy with on the day. So don't blame me or flame me, chat, if I don't get into another trade. It's gonna have to be really convincing.
They're looking for you to lead, brother. If we can pull back a little bit, I'll take long. I got some limit. Actually, I'll move my NQ over here. The view. I got a couple limits below. Below in the gold market. I don't know if we'll get there, but around 38s, 43, 38s, and then just kind of the breakout retest where NASDAQ is right now. I do see NQ potentially getting a new high through that morning high here today. But it's just a matter if I can get long before that. The low of the overnight session is the 1-day expected move for the SPY, darn near the tick. The expected move for the SPY low of the day is 676.35, and the low is like 676.42. So we held that expected move. The equivalent expected move low in the ES is 68.37, and that's basically where we bottomed or very close to it. Went a few points below.
What are my thoughts on gold? Yeah, it's doing the range thing again, just higher. So broke out of this range, and two zones I marked, just volume. So any volume built above this range now, to me, that's a hold. That's a bit that's stepping up. So two zones, and it's just been holding. If you look at, just blow it up and make it clearer. First time back, it's a hold. It's a hold with volume build here, which means the passive bid still is here, because any build is a two-way tape, selling and buying. And well, this is the story. If it's two-way tape, both parties are in there. That means there is a bid that's willing to still bid this market up, and a sell side that is stuck. So to come up, if we just look at, the overlapping volume of this double top for now, it's a double top. We can see what's going on the upside. Right now, they are building right below. So yes, there's a passive offer. And right now, if this buying volume build isn't enough to push price through, well, the taper is not going to do it either. So the day could come back down into this range, and we can just go back and forth here. But for now, if it's a high time frame bias, long side is where I would be, because they are holding the upper range. They're holding where they need to, and double tops are fake. So at some point, it's gonna die. That's why I'm not even drawing a zone here, because
double tops are fake.
double tops are fake. Double bottoms are real. Double
because the market
tops
goes up.
fake.
It's
Yeah, that's
consistently
gold
new
for me.
highs. The only thing that double bottoms aren't real in is oil.
Oil or RTY maybe?
Yeah. Yeah. Although the RTY has been a stronger index here over the last 5 days at least. Dow's kind of leading us up 2.2% over the last 5 days, and the Russell's up 0.6 versus the Nasdaq's down 1.3. I believe I'm right from
Where did you say you were gonna look for
gold. I got
for
a limit in gold. Well, I got a limit in the NQ at 25,264.75, and then 4337.9 in GC, and I'm just sitting
what's that
there.
264?
It's the midpoint from the most recent low.
Kind of like a
Yeah.
halfback.
Yeah, half back, midpoint, whatever you want to refer to it as.
That was
I
my
refer to it to a half back, but then some people are like it's the midpoint. 50% isn't a fib number. I'm like, okay, well, whatever. I don't really care what you call it. Doesn't really matter to me. But yeah, I was looking at the 25,240 level, and that is the half back or the midpoints. Obviously, when futures roll, we get a little screwy on the charts, but that is from the swing low on November 25th. It was like just a huge hammer out on that Monday. This is the half back is 25,240 area, and in that general zone seems to be where there's some buying both on the December contract on Friday, and now that we finally got down to that level in the March contract, which occasionally what happens is we will fill on the December, but then we roll in March once it's filled too, and we work our way lower. So I don't want to be too aggressive up. This is more of a range trade so far here. Bottom range, top of the range, bottom range, probably back to the top range, but I hate hitting anything in the middle. Just punishes you.
The profile definitely locks me out of a lot of things today. Do I use a DLL? Everyone should use a DLL. To me, a DLL isn't just everyone will frame it as this is the risk you are allotted for today and you just need to hop off, and they just kind of take that as it is in a vacuum, so it's hard to adhere to. For me, a DLL is way more than that. A DLL is, hey, if you're already in this much drawdown, your edge is not there in the markets today. If it is in the markets today, you are not executing it today. Things are just not working out for you, whether it's this reason or that reason or the other reason. But ultimately, the fact of the matter is, what you think the market is prone to doing is absolutely not happening today. It is not working with you. Even if it's stuff like, oh, I had good trades, but it wicked me out. The market is just not cooperating. The DLL is to remind you, hey, you know what? Me and the market, we're just not speaking today. We're not on the same page. And then you just move on to the other day. A DLL is more than just, oh, I screwed up enough. It's literally an eye opener of the market is not cooperating with your strategy. Stop trying to force it. So yes, everyone needs a DLL, not for, oh, it's too many losses. It's literally a wake-up call. The market is not agreeing with the strategy. Just leave it alone. Anyways, Loon, that's the answer. It's not the way I feel strongly about some stuff. And the way I say it is not to the person asking the question or to even to you guys. It's literally, I feel like I'm speaking to the younger trader me that I wish somebody had told me these things. So that's why sometimes when I go on these rants or whatever, yeah, I get, it sounds like I'm very passionate about it because yes, I do wish someone had told me these things back then. So it's kind of like I'm speaking to the older me. But yes, that's the DLL use case more so than just boo-hoo, you took too many stops, get off. It's a lot deeper than that. The highs
Yeah.
on double top look poorish on NQ maybe. Yeah, the highs are close to equal, but it is a taper, so wouldn't say it's poor on an order flow standpoint. But if you're measuring like how close the top is to each other, those two. You can call it what you want. I mean, anyone can call anything what they want, right? What hours do I normally aim to trade? Well, it used to be like the B period through like the next hour because that's just when I wake up and get to desk. But lately I'm trading whenever they throw me on stream. That's just what it is. I don't take any trades off stream, not for a while now. It'd be too much trading for me for the day. You guys know I'm in and out of the charts. I don't like to stick around. It kills my mental.
Do you pay attention to the 80% rule or with volume profile? That's
What's
what
that? You
So
mean
it's
like,
like when you gap below the value areas for the day and then trade back into them for 2 time periods, you have an 80% chance of filling the top of the value areas, which we had today because we opened below both ES and NQ's value areas. And if we can trade, I think we've traded back into them for 2 TPOs or two
hold
time
on.
periods. There's an 80% chance we go to the top.
What? I don't even know what that is. Okay, you said it's an 80% rule if we're outside of value area.
Yeah, we got to open below it or above it.
Oh, it's an open.
Yeah.
It's
So
an
if the
open
open
above
is
or below.
below value area, do you look at value areas? Right? You look at value
Yeah,
areas, right?
I do. Yeah, yeah.
Yeah,
But
yeah,
I don't know about this 80% rule, so I'm trying to learn something right
yeah.
now.
Jim Dalton is the originator, I believe. I don't know if you've heard. He's kind of like the value area king, the volume profile king. But it's a
So
rule
if
he
you
teaches.
open above or below, if you open outside of value and you spend 2 periods inside of it.
And just touching it, we don't have to be like the whole
Oh,
period doesn't
okay.
have to touch it. So if we just touch it, so which I believe we've had today.
Is it within 2 periods or in or
No,
for
any
two
random
periods?
2 periods. So the second period basically triggers, it doesn't mean you immediately are going to rotate to value area high, but we have open below value area low here today in both the ES and the NQ. And I believe both A and B period traded it um, into it. Is that would you have A and B period trading into value area low here today for the indexes?
Honestly, I do. I don't know that whole 80% thing in like it's like how specific it is, but it's something that I would tend to do anyway because it shows me if that were going to be the case where the market opens outside and it finds its way back in, to me that's a failure to auction even lower, whether it's a lack of interest, whether they found a bid or an offer that still outweighs, current supply or demand. Naturally, seeing that would drive me to take that trade, but it's not so knowing that specific kind of like rule, quote unquote.
Yeah,
So that
check
that's
it out.
definitely new to me.
There's some information you can find out about it online.
Mhm.
Um, I'm not the originator of the idea by any means, but it's a value
Yeah,
tool.
I think that's a good way to quantify the whole thing for sure. For me, it would just be like a vibes eye test, like, okay, they've opened and they're unable to drive. So if they're going to show a lack of acceptance, then we'll just take this thing back. Yeah. So that would have been my view, but that's clearly not as specific. Um,
Probably something you've noticed and just not, like I said,
yeah,
you're trading without knowing the whole thing.
yeah,
Not that it matters, but it's good. 80% is pretty good
that's
odds
good to
on
know.
trading.
That's
Yeah.
something I'm definitely gonna relay to some buddies of mine who are like starting to, well, they've been in order flow, but they're starting to lean more into it. So I'll definitely pass that along.
All right. Let's see if we can get bid here. Move my target up and let's take a look at we
Young
are
Bleezy,
wide.
Young Bleezy, NBA Cup today, baby. I only care if it's my team playing. I'm just kidding.
The ATR I have measured at a 50% premium at 90 points right now. We're scooting and booting for sure. It's a little larger, but just got long that halfway back or discount of the last leg, whatever reference anybody chooses to use. And I'm looking for a potential swing high. I'll give this trade 25 minutes, which is a lot longer than XY would let it figure out. I'd love to see it complete fast. We're doing the same thing in the ES as well, back to the midpoint of that last leg. It's kind of a either hold here. Otherwise, I think we're probably going to chop to like at least middle of lunch if you can't get it going here. And at that point, I wouldn't be too interested in doing too much. If we're just going to go into a chop fest, so see if we can get a reaction. I'm looking for a little over 100 points off this level. Why did I get in here? So this is, we came to, I've been looking at since yesterday, this 25,240. We were bid off this morning. We came back down, made a moderate new low, no sellers below that low, moved back up. And then we had this little blue bar here. I call this a trend bar, which is just it. Some of my indicators, 3 or more of them if I swip this up, but like this oscillator moves more than 3 points. And then I'm just basically buying back in the middle of the range, anticipating that the midpoint of that range will hold and get a continuation. So I see this as a failure to move lower, a push higher. We're still a little indecisive. We are range bound, and I'm just anticipating that this lower edge of the range holds again and swings up and moves back to highs. My stop is based on the ATR, which is this yellow number up here. I multiply the ATR over the last 10 bars by 50%, that's pretty wide. 91's pretty wide right now. And then I'll let that play out for like 25 minutes and then I'll just be moving. I don't even have my stop at 91 points. I got it down at 25,196. You should be able to see it on my screen, that red level, but it's 90 points right now. That's big, pretty big. But we have some volatility. And also we're going to be approaching in the next 5 minutes what I consider to be like a 5-bar cycle. When we're in ranges, look at today. I always say this every time I get on, but like it's very rare that we rally or sell off for more than 25 consecutive minutes. Like look at this sell off here from earlier today. It was 5, 10, 15, 20. Sorry, 5, 10, 15, 20, 25. All right, 5 bars straight down and then green bar. Okay, and then even this move up here was 5, 10, 15, 20, 25. Reverse. This is 5, 10, 15. This is going to be 20. And then one more bar would be 25. It's just, especially in consolidations, very hard to see continuations past that amount of time. For whatever reason, it's just something I've noticed. I can't tell you why. It's just something I've noticed. And if you look at the market, you count those bars one after another, you'll notice that like whatever support or resistance level you have on that 25, that 5th consecutive bar or that 5th bar from the beginning of move, like that's the kind of one you want to trade. But we are moving lower.
We are moving, yeah.
And then we're coming into gold here potentially. And if this cracks here in the NQ, then I really got nothing on the table till we are right at the expected move for the ES right here. 68.37.5 is the expected move for the day in the ES. The 25,140s is the expected low or expected move for the NQ. That's what the market makers have priced in. Once again, does not mean that that's all we're going to move, but that's what they've priced in for the day. CES coming off that 68.37.5, which is the expected move and basically where we failed to continue from so far here today.
Yeah, still stuck in overnight range.
See if we can get this. Is 4 bars down, 2 more minutes to 5. This is also the 50% retracement from the overnight low in the NASDAQ is 25,232. 25,232. They're all kind of a cluster of different levels here. And just shy of my gold fill so far.
You still long NQ?
I am still long NQ. So hopefully we get this hammer out here. I do actually think CL's bottoming. We just pulled into a
40 seconds. 40 seconds right here. Give you a really good 5-minute close. Yeah.
Yep, that's what I'd love to see.
Yeah, it would be huge.
I'll give the levels. You wait for the confirmation, looking at what you're at, and then we'll just get in there together. Like, we should bounce here, but you wait till we bounce. I'm gonna jump in early. You wait for that confirmation. I'm gonna sit here like a dunce. Yeah, nice reversal there in CL here off the low. We had an ATR expansion at 10:55, and then spent the next 15 minutes. There we go. There's gold. It spent the next 15 minutes coming back down into it. A nice swing higher here in the last 5 minutes in CL. So I think that's possible we get those new lows here. Or, I'm sorry, those lows are in, not those lows. I don't want to see those, but still quite against the momentum in CL. Where do you see what market makers priced in for the day? So I get them from a guy named Perry Wilkie, and Perry plots them for me. He pulls data from multiple sources, and then he just plots them on the chart. It's a little bit of manual labor from him, but Perry Wilkie is his name, and he gives those levels to me. I get him from a guy who knows a guy, kind of like that, Chicago style.
It's one of those. I got a guy.
That's where I get him. I mean, I don't know what to tell you.
I got a guy.
I got a guy who pulls data and inputs it manually daily.
It's the general logic. Most of my trades, underwater participants becoming forced, buyers, sellers driving price. I try not to, yes and no. Yes, but also no, because I try not to I try not to impose anything on the market in terms of like anyone's forced to do anything at all. To me, it's like I am pure auction market theory. It is all an auction. Where does the market want to go? Where can they find participation, and where are they not going to? And if it's an absorption event where somebody is getting quote unquote stuck, it's more of a in this range, there's way too much sell interest versus buy, or vice versa. More so, these guys are gonna get run over. So that's my overall view. But also at the same time, yes, the more executional component would be, okay, yeah, there's a lot of selling here. It's not going rewarded. And if it's not going to, it could unwind. So that's kind of like the forcing to get out. But my broad view is always the market is just doing market things. It's just an auction. It's finding the best price where both sides can agree. And then when it gets too extreme on one end, that could be a lack of interest or huge, unrewarded aggressive participants. It's the same outcome. That's really, I try to keep it that simple. No fancy schmancy, this is the inner workings and the, I don't know, magic voodoo algo codes and stuff like that. To me, it's just an auction.
I would not consider 10 points in the ES scalp personally. I think that's a little bigger than a scalp. But I don't know who's defining that. Depends on also the time frame that 10 points happened in. If you nailed 10 points in 2 minutes, yeah, I'd say that's probably a scalp. It takes it takes 25 minutes to hit 10 points. I'd say that's probably not a scalp.
Yeah, crude. I find that, the playbook is really a melting down of my brain. So it's the same stuff I've been doing. It's the same stuff I've been saying. If anyone's on the stream and then you refer to the playbook or vice versa, you're gonna hear the same stuff. I try to keep it as simple as possible, as consistent as possible. So I'm not gonna, you know, there's no different method of my approach that isn't in there. Like I don't have a single piece of alpha that I'm keeping away from the internet, behind a paywall or something. It's just, I think if you're charging someone for something, it should be for your time. But if it's educational, I'm not going to ever charge for education because, I mean, it's all out there already. There's nothing new under the sun. Yeah, Funky Buddha, that's really it. It's what's the market trying to do and how good of a job. So, kind of like value areas, going outside and failing it. The same idea as if, let's just say everyone goes, you're at a club. It's cool. You and your friends, you're all having a great time. You want to check out this other one. Everyone's having a great time at this one club. It's known for a good time, blah, blah, blah. You go to the other club, and it's just not everyone's really participating, right? Everyone's kind of like, it's cool, I guess. And then people start to kind of leave slowly. To me, that's like the market was in value. Now it breaks out, it tests new range, it's advertising new prices, and people are just not that interested. So what are they going to do? They're going to go back to the other club, which is value area. And that's just my thought process. It's all auction market theory, across all time frames in every way possible. There's no other way to fuck that up. And you can just spit out random analogies. A GT3 is selling for 100K. Some people list it for 120. There's no bites. Well, what's it gonna do? It's gonna go back around to 100K, right? Or it's 100K usually. Someone lists for 80, and those are gone in 5 minutes, 5 minutes, 5 minutes. Well, there's gonna be no more offers at that price if they can't even sustain that price for very long. It's gonna go back to like 100K. Value clubbing, yeah. Right. And then like the offsides participants or, absorption would be like you're at the club and everyone's going in. You're like the market's rallying, right? So everyone's pouring into this club. There's so many people and everyone realizes, wait a minute, it's all dudes. It's all dudes in here.
Low value club for sure.
So what are people going to do? If everyone's a buyer or a seller, what are they going to do? They're going to start exiting the trade. They're going to start exiting the club, right? And that's just how it is. It's crowded. It's a crowded trade. Yeah, so everyone starts exiting. They start liquidating or they start squeezing because, well, it's too one-sided now in this range.
And then you also have sunk costs. Like if you paid cover to get in a club with all dudes, you might stay for a drink.
Dude, you paid cover and you didn't really pay attention, so you went to the bar and got a few drinks first, and then you started to realize, yeah, that you got to stop out. It's just a wider stop than you're used to, but you got to stop out. Don't buy another drink there. And that's what you're doing if you're adding to losers. You're buying more drinks at the club you don't even want to stay at. Finally, some concepts I can understand. Yeah, there's the new age auction market theory for you guys. You got to stop out. Do not buy another drink. You see what's going on. It's not breaking your way. Well, someone just sold into 100 lots right there at 220s in Q. You guys, it's very hard for me to interact with this because it's a balanced range, and on a high time frame, it's not really in a spot that I can do too much with. I had the short earlier because of this in the day, coming up, prior volume and showing a lack of interest, which formed all this, and then coming back around halfway point, buying, getting stuff. This was my short, right? But it didn't just continue down. Ultimately, I had one runner, and I think I got out of it at the open. So covered most. I covered half for 50, the rest at 70, and then at 50 on the runner, trailed it. And then the market just decided, look, we've made the decision on the upside. It's this. then they made the decision on the downside, it's this. And if they're not going to make the choice to break either side, and the profile already looks like it could be balanced, it's going to be hard for me. It's just not my thing. And we're seeing the result of that now. I don't have anything that is even tempting me to get into something, especially if I'm sitting on profits. So it's tough.
The,
It's tough.
the Jim Dalton book is more called Markets and Profile.
Yeah, he's like the godfather, the goat
The GOAT, yeah.
in the auction market theory world. Club promoter theory. Yeah. It's time to
write a new book.
Time to take over, man. Auction market theory. No, that's
Clubs and
dinosaur
contracts.
shit. Everything is not about like contracts, it's cover costs. Yeah, I mean, reinvestment. Think about it, right? If cover's free, let's just say buyers, right? If price goes low enough and it's just too low, the market's not finding any interest from the sell side. It's like a club that's giving dudes free cover and drinks all night. What are you gonna find in there? The same thing you're finding at those ranges. It's just
A
buyers.
lot of hammered dudes. We are looking weak.
Hey, Crude, that's pretty cool. I'm glad it gives you that much value, man. Ticket costs, cover costs.
Put my stop up here for GC.
Adam, you don't know me. You don't know what I like and what I don't like.
Oh,
Just kidding. No, I'm not.
Don't reveal all the secrets.
Some things are very proprietary, guys.
Got to secure funds somehow.
The fact that I'm married is just a ruse. The wife is just is me faking the order on the order book.
There's a word for that. I forgot what they call it, but there's a word for that.
XY, did you read the Dawn book? I thought I remember you saying you don't know how to read. Well, that's one way to start a rumor. No, I mean, I'm reading chat, aren't I? Come on.
Come on, let's hold this.
I think they've done enough down here, and they should be over trying to short this by now.
That's what I'm thinking.
It's quite some absorption going on, and they're not getting what they want. Yeah, maybe you guys need to hit the likes so this can pan out.
Please.
The market's just waiting.
Still
buyers
holding
are
at
absorbing.
47 in the ES. That's once again, that's the expected move for the day. 37.5. We cannot crack that.
Yeah, no IB break. No IB break on either. That's another thing. If it's been 2 hours and IB hasn't broken, it tells me a lot of things about what I definitely don't want to do. So it's today's midday markets stream is going to be pretty slow on my end, guys. At least we can poke into some fun clubbing analogies. Yes, thank you, Dr. Steve, for the disclaimer. After lying on my name and telling people I don't know how to read. I can only read order flow and the level 2. I cannot read text.
Some skills you don't need, I guess. You have others.
Reading text doesn't pay me, so whatever.
I have chat fingers where I just misspell everything because I'm reaching over my desk. Just trying to type in. And I just get lazy.
So you trade on a like desktop everything. Laptop is only when you're like traveling, right?
I have both. I have 3 computers on my desk and 2 mouses.
What the hell? if you guys want to, this is the closest thing you guys are gonna get to seeing a market maker right here. He's got two whole computers. Got one left hand on a mouse, right hand on a mouse. He's just dual wielding the mice.
I'm not even kidding. I have 3 mice on my desk. Like, I don't even know. I'm afraid to try to hold them all because I'll end up dropping them, and then I'll click something I didn't want to click. And
Maximum short at the lows.
I don't have a play. I don't have any gaming stations. Fortunately, I don't have time to do that with my life.
PlayStation 2.
I have not played a video game in 10 years. That I play video games all day. That's kind of how I see it. Trading is kind of like a video game, in my opinion. It's just with money.
You said what? You play video games all day?
Me? No, never.
Oh, I thought I just heard. Oh, I
I
play
said I
video.
haven't played in 10 years.
Oh.
But I think trading, I play video games all day in a sense that I think trading is somewhat of a video game. I mean, it takes extensive concentration. You're
Yeah.
you're looking at a
Chat.
screen.
He plays the craziest PvP of all time.
Yeah.
This is the most PvP as games can get. Bulls versus Bears, yeah. Ultimate Battle Royale. Yep. This is the most competitive game out there.
That's for sure. All right. Getting back above where I want to see now. Let's see if we can get a little bit of an extended move. We had a bounce in gold, and then we just kind of faded down here into the Euro session close. But
Order flow in rollover week is not very safe tool. I actually agree with you there. I actually agree with you. Rollover is very wonky. It's a lot less reliable in rollover. So I just play broader stuff. Like you see me always pulling up the 1 hour, just using volume to really guide me. And today it's telling me, well, it's
there goes
balanced.
CL. You can I'm just wondering if we're gonna have just an absolute boring market until like 2:30.
I think so. They're not even, they haven't broken IB yet.
Like we're moving higher, but not anywhere near what I want us to be doing.
Another Sapien. Isn't this a setup for a long? I guess like in a vacuum, sure, because a lot of absorption down here. This is the lows. You go to the 1 hours where all the wicks are. You could long here, but I'm seeing this first. There's this lack of acceptance at higher prices, and as we're building lower and we're getting at lack of acceptance still, I think we're just going to start to build into the 100s here. If they're not going to build up here, to me, it's more likely to build down here. Consider that, and then it's a balanced range. We haven't broken IB yet. They could just break the IB low from here. ES looks like it's definitely trying to. Stuff like that. There's a lot of things in the way of a lot of things. Long bias, short bias.
Yeah, the
And I
fact that we
don't.
could bid out of there makes me think we're going lower, probably down to 25,000, like 120 area. If we
Yeah,
lose
there's
that
so much absorption and selling here that if they can't pull price up with this activity, then it's going to be hard for me to want to bet on the long side because of that. So what Jack's saying is true. This is where they're trying to hold. And if the buyers try to hold somewhere and it doesn't hold, well, it's going to get dicey.
Yeah, you're not getting the reaction you want to see here, and then I think all these morning buyers, including myself, are going to be stopped out through this low, and we're going to continue, really to the next level of
They're in the
balance.
wrong club. Got to move
They're at the wrong
clubs.
club. They've paid their cover.
Yeah, everyone put down your drinks and run out. They're looking at the entrance. They're seeing more guys come into the club. It's just dudes coming in the club. You got to put the drink down and leave. But yeah, it's tough. Where the market is and today's profile locks me out of a lot of things. And the euro close didn't change much, unfortunately.
So what would you want to see for the profile? Like, would you want to see us move out of balance? Would you, what locks
when
it
it
in and
comes
what unlocks it for you?
when it comes to balance like this, one thing would be to break the IB, go towards 150s, 140s, like you noted. That would be like perfect storm. Build me a small node where I can see, okay, this is two-way tape. There is selling that's still trying to sell this thing. And if we can get back around the IB in the 180s and leave that node behind, it tells me, okay, the sellers did try to extend price outside of value. They did try to go to another club, just not enough interest. And if that happens, what tends to happen is you go back to the other club, which is value, which is back into the IB, and then you can just grab that long. Or if it breaks, it's got to go down, build, and then continue to build even lower. And then I can look for reoffers from there. So very specific things, neither of which are even like on the table right now, it seems.
I
So yeah,
got
I'd
to be
like to
honest,
see.
this reoffer term is a new thing for me since being on NinjaTrader. Why do we refer to, or what is a reoffer? Just an offer that's like,
It's just a pullback, you sell again, right?
okay.
So it's like if the market's offer, it's that pullback where you're looking to get in on the pullback towards the downside. And then a rebid is the same thing. If the market bids up, you're looking for that pullback lower to bid it again. So it's like it's
Okay.
on the pullback, it's
Okay.
like offering again or bidding again.
Okay. So we're already offering, and then we're just looking for a pop higher to reoffer, and then rebid would be the opposing.
Yeah,
Like if
like
we started
the
bidding
opposite.
from here up to like 25,360s, let's say, and then we came back down, and would be like,
Yeah, that's like it's just a
rebid.
pullback. Literally the same thing as saying, "Oh, I'm getting it on a pullback." But if it's for a short, you just say reoffer. If you for a long, you say, because then in order flow terms, you always say that, well, the market's offering here or it's bidding here.
Okay, so on my 25-minute theory, we literally went down for 25 minutes, and now we're going sideways for 25 minutes. When we crack this, look for that move to kind of extend for another time cycle. So this is not bullish at all. Because we failed 1, 2, 3, 4, 5 red bars, and then here we are, like 1, 2, 3. This is 4. So I literally think the next bar is, and if we crack lower, I would not be a buyer for at least one time cycle. I would just totally let it slide. And if you're short, hold it. I don't think there's any reason to immediately look to take anything. I think we could just continue to slide if that's and what ends up happening. I mean, it's very close to happening, but this consolidation down here, I mean, you could argue that consolidation's already gone for 25 minutes. You could argue inside of this range is 5, 10, 15, 20, 25, and then this is that final bar. So a crack below here. I mean, I'm looking for an immediate move to 25,140s is the first thing I would look at. I mean, not that I even want to buy that, but that's where I would anticipate us going.
Yeah, this is super key. For me, this is like the proof in the market. Okay, this is where the buyers are. They're definitely trying to bid this. They like the price, but if price now trades under all this buying, this passive buying, it just gives you like literal information that the market has more sell interest in this range than buy interest. And that's something very hard to long against. But until it breaks, this is like where the buyers are stepping in. So the risk reward is there. Like he said, if it breaks, he can just hop out of the trade. But if it works, he's getting paid a lot more than what he's going to lose.
Yeah, and there's a question here. So why am I long? Listen, I don't think I'm smarter than the market. The market's going to tell me, like, my stop's below the low. If we take that out, like, I'm instantly going to be out of the trade. But I'm not going to pretend that I'm like I don't know what's going to happen. I mean, we're holding here, and if we break, that's bearish. But we haven't broken. If we hold, it's bullish, right? But I don't have enough information to make me want to cut the trade on what I still think is the bottom of the range. Now, I'd love to see us trade it and bounce immediately higher, but that isn't always going to happen. We're in the middle of lunch. We could easily rotate back up 130 points here before 130, and I don't feel like throwing this trade out the window because we haven't immediately reacted yet. What I could do is I could move my stop up like 5 points just below this low. Instead of having it down here, I can just move it up a little bit. but I put the risk on the table, and at this point in time, I just letting that stop, tell me I'm wrong instead of looking at a few candles, assuming that I know what's going to happen next. Because the market is, of course, many times random, and I'm not going to pretend to play that I know what the next random move is going to be. It's just that if we trade higher, I have a larger target than I have at risk. And I don't necessarily think that we're absolutely going lower. There's no way to know that. And I'm not going to pretend that I do know that. If the market goes lower, I'm getting stopped out. Don't overthink it.
Good morning, Omni. That's kind of tough. Vietnamese Viore Viking. Are we all buying CL here? You gotta ask Jack. I don't have CL up.
Um, yeah, I'm probably going to wait on that one. I uh, I thought that first move lower. The thing is, in a sequence like this in CL, you have that first reversal. It's really tough to catch because it's been slammed. It's like the weakest market I'm looking at all day long. So playing along and that is tough. And then that first move might just be a reactive bounce. I don't know about continuing to buy like a sequence. So you have that first pullback, it rebids, as referred to here in NinjaTrader. But I don't really want to be aggressive on the second pullback. It's because the higher time frame is still, from the way I'm looking at, aggressively down. If I was going to buy it, it would have been that first move. The second move is a little harder for me to chase, but then again, it could be great. I do think tomorrow will present a good two-sided opportunity in CL. I absolutely do think we have been kind of exhausted on all targets that I had. The lowest target I had today on CL was 55.20, and we traded about 20 ticks or so below that and then bid back up. But I missed that first trade, and I don't want to take the second, so I'm just not going to do anything. Sell silver. Yeah, I mean, gold came all the way back down to the range. I have not looked at silver here today. But man, you want to talk about a weak market, take a look at natural gas. This is why we don't take off the trade. Because we don't know. I don't know. It'd
Yeah,
be
at some
great
point
if I
it's
knew.
just you have to resign all control and decisions to the market. And it's like, hey, this is what I'm gonna lose, but if it works, if it works out, it works out. I say that to my buddies a lot too, because they always fight between like, I like this price, but I want confirmation. And when I try to get both, I don't get any. I'm like, you can't have it both ways. If you want better entries, you have to risk price. If you want more higher probabilities, you have to risk confirmation. But that comes with bigger risk via price. So you can't have it both ways. You just got to make your choice, turn it into your strategy, and live with the outcome. Because either way, nobody knows which direction it's going to go. And even if you do, calling the market is so easy, anybody can do it. But executing within it with risk is very hard. So you can sit here and say, oh, we're going to trade all the way up. And it does so by end of day after chopping and doing this and poking even lower. And then you can be like, oh, yeah, told you. Or vice versa. You can say it went lower, but it's like after a friggin' 100-point move up or something. So it's kind of like my short, right? I got the short, I got my points, but ultimately the long was a way better trade. I wasn't on the right side, right? Um, that can happen. So in this trade, he can get however many points, make his money. Ultimately, yeah, is it going to be the market going lower? Yes, but at that time, that specific setup, that specific scenario, it did pay him. It is what it is. To me, that short, I did think the market was going to climb lower. It paid me, but you can see it was the better side. The better trade was just to wait for a long. But you never know until the market makes the choice. I
Yeah,
think I
absolutely.
was in before it made the choice. Hey, look, we're actually not going to go lower. We're going to paint the higher low. And then they made a choice, higher low, higher low, higher low. And then they decided, all right, second attempt to go higher. That's a no-go. I don't think we're going to do it. And that's, close to this. It's close to the spot. They offer that. You just never know. Just measure your risk reward. Is
Mhm.
it your strategy and the market's going to decide whether it takes your chips or gives you more chips.
Yeah. And I like when I'm trading on something like this, it's like, once again, I try to evaluate, like, instead of trying to evaluate every minute, you're going to go in crazy unless you are trading that smaller time frame. I'm not trading that smaller time frame. I'm not scalping a tick chart. So I'm not going to look at a tick chart and give myself a headache thinking that every single 1600 tick bar matters to my position, because right now it doesn't. So what I'll do, like I said, when I got in the trade, was 5 bars down, 1, 2, 3, 4, 5. My little timer went off, and then we had 1, 2, 3, 4. Guess what? This is the 5th bar. So this breakout bar is a 1045 bar. I'll go out another 25 minutes. Oh, no, sorry, 1145 bar. I'll go out another 25 minutes, and I'll just say at 1210, I'm going to make another decision. I'm either going to move my stop up at that point, take my trade off. I have to do one of those two in another 25 minutes, and that's moving my stop up or taking the trade off. But until then, I'm just going to let the market play out. I'm not going to think about it. I have my target to the top side of where I think we could go to the range. Maybe that completes the next 25 minutes. I don't know.
What's your target?
We spent a whole lot of time. My target's 25,381.
381. Oh, okay.
So
well,
basically,
congratulations. Jack is I ain't hear no bell. As they're just dumping into his entry. I ain't hear no bell.
If I try to trade around that position in what was I don't know, what was that, a 40-point range, roughly 50 point range, just back and forth, like, I'm gonna get nowhere.
You get nowhere and the broker gets sushi dinner.
Yeah, that's for sure, just racking it up.
Omni, my day was pretty good. One short, I think about 74 points.
This swing mark here, this white dot I have on my screen, that I have a 3-bar continuation that'll print, and I'll look at that as resistance. So I would, if I were to look and just say, hey, I'm kind of bored of this trade right now, I don't like the way I've been in it so long, this is where I would take that off, right at this 25,320 area. But the 25,000, I always think about where we came off of. The 25,240 area, when I got off stream yesterday, I said this is the level I wanted to trade tomorrow. I literally told Jim that. And so when we're sitting here today, and I thought about this for 24 hours, I'm not going to puke the position out. I waited a freaking full day for that. And then the ES also held what I thought was an important level, which was the expected low of the day. So if that's the expected low of the day, and maybe we finally start short covering later, it takes some time. The expected high of the day, not that I think it would trade, but I'll give you guys what it is. The expected high today in the S&P would be 69.24, and I've been trading long enough to know that anything can happen in the market. I don't know if it's going to happen today, but I wouldn't surprise me if it did. The expected high of the day in the NASDAQ is 25,540. We have the rest of the day left, and we can consolidate for the rest of the day, or we could break out of all of these swing highs and push lower and then drop 50 points in the ES after. I don't know. There's so much randomness and things we cannot predict. You just have to trade what's in front of you. Do I think 80 cents is a reasonable target on CL? I do think that's a reasonable target, especially if you're trading to the long side here today. One of the things I look at is what I refer to. So I look at the prior day's range, and then I look at the prior day's range to the low of the day, and I call that the lower mid. So it's basically the prior day's mid to the current low of the day, and it gives me the middle of that range. That would be about a 56.04. So when we snap back, either on an aggressive sell day or an aggressive buy day, we usually snap back at some point to the upper or lower mid. And that would be 56.04. And that 56.04 is it's a little further than up 80 ticks on the day. But that is something I look at for an ideal target if we're going to snap back. Because how many days you see We're going to the open. I mean, gold yesterday, great example. We're going into the open. We're up. I think we're up like 100 points or something, and then we drop 60 just straight down.
Hey guys,
Hey, Jim.
Jim,
good job today.
I
thanks.
mean, for what we had, yeah, sure.
Yeah, seriously, it just locked us into this
A lot of
profile.
good content. A lot of good content.
Jim's the
Appreciate you
boost man,
guys.
our hype man.
I know. He's looking at the
No.
likes right now. He's looking at the likes right now. Guys, come on, bump it up.
No, I'm not. I'm
He's
sure
scanning.
they're great. I'm going on faith today, baby. We're going on faith. Now that you mention it, though, to everybody's listening, the subscriptions. We greatly appreciate the subscriptions to the channel, everybody. I know a lot of folks have already subscribed. Thank you for doing that. If you haven't, it's like I said, it's free. Just click on that thing. You're subscribed. It means a lot to us. It gives the network more exposure. It also provides attracts more talent in the chat and on the screen. So we greatly appreciate that for everyone who's clicking that subscribe button. And we have these two young men here killing it every week on NinjaTrader Live, XYZ and Jack. Let's give them a thumbs up also.
Look it up, boys. My boy
Lock it up.
XYZ.
He's the DJ at the club.
There you go.
Not that old dude club, man.
XY, you back this afternoon or no?
I don't, no.
No, okay.
No.
You seem to be. Wait a second.
Yeah, I'm all over the place, right?
No.
Am
Leo
I?
and Kane are back. So Leo and Kane are back. That's right. So we'll have Leo and Kane trade to closes this afternoon. 2:30 start with me and Shai, and then right after that, Leo and Kane will be here. So, guys, appreciate all your good work today, and I will talk to you both soon.
Thanks, Jim. Have a great day.
See you guys.
All right. Let's do a quick edge report right now, folks. A couple of markets I just wanted to cover really quick. The NASDAQ is interesting, and here's why. So I went to edge alert. We're trading in the initial balance. This doesn't happen very often. I mean, we're still in the initial balance. Remember that first hour high to that first hour low. One thing to note, that first hour high is pretty close to 0 DTE put support. This is an important gamma level, 25,400. So we wick through it, but we didn't close above it. And we didn't close above, of course, since the IB closed above it as well. So I went to edge full, spelled with one L, and I said, okay, what's on a Tuesday? What kind of behavior should we expect with respect to an IB breakout by wick? Because we didn't even have one by wick, let alone a close of a candle. And so on Tuesdays, and this is a year-to-date look back, 79.59% of the time we had a single break, meaning we wicked above or wicked below the initial balance, not both, just one. Alternatively, we have an 18.73% look back, wicking both above or below. Now, wicking could also include a candle close as well, and then a break could also include a huge sell-off or a huge rally. So keep that in mind. And there's only 2.04% chance that we don't wick above or wick below the IB. And so that's where we're at right now. We're in that 2.04% mode right now. Now we still got a lot of trading day left, and it is rollover. And this morning I think we mentioned that we still had quite a lot of open interest to roll over. But right now the micro Nasdaq's done 1.4 million. This is the March contract. So keep that in mind. We'll keep our eyes and ears on that. Let's shoot over to crude oil. And by the way, I did find my glasses from this morning, and they were right behind my laptop. Crude oil on a daily chart. This is interesting because this is really trending down. It's been trending down ever since this peak high, swing high, I'll call it, since October 24th. But even going back, you could see swing high, lower swing high, lower swing high, lower swing high, all the way down. And then today, this week, actually, at the end of last week, we had a nice area of support around $57.98. We're kind of going sideways. We broke through that and then some. These target wicks down here, this was back again on the 20th of October. We just blew through it, right? We had 1, 2, 3 days back here in October where buyers kept pushing us back up. And it even happened yesterday at the same level. Well, not today. Finally, the dam broke. and we're moving down. And so I just added an extension, a 3-point extension. You can see where I started it from this peak high. It takes 3 points. Here, let me highlight it so you can see the bubbles. Peak high to the low. That was the trend, high to low. And then I look for the retracement back up. This is that third level here. I just dragged over to the side so that the numbers didn't interfere with the candles. And then boom, tapped it. So that's an extension. And we see we got to that, we whipped to that 100%, that 55.01. A little bit of a tail so far. Let's look at this intraday really quickly here. Just to see what that looks like. And VWAP has been the story, right? Session volume weighted average price. So many of these guys are watching this. That's that white line. I tracked it from the start of when Globex opened last night, 6 p.m., and just kind of look at that price action below, completely below this white line most of the time. Yeah, we had a couple of tiny breaks above it, but nothing sustained it. No confirmation candle above it. And, look at that 9 EMA too. That's also tracking pretty nicely as well. Right now, the VWAP is right at S2, below that 1-day min. That's that MenthorQ 1-day min that I keep talking about. And we broke all the way down to that put support, 5,500. We broke and went back above that 0DT put support right now, driving back up to that VWAP. So I'd be looking for that VWAP touch before I initiated a short. That's my opinion. We'll see if we even get that far up. Maybe we get stuck at that 9 EMA, which is that light yellow line. That is Late Morning Edge Report. Appreciate everybody being here with us at NinjaTrader Live. Great session so far. Looking forward this afternoon with me, Shai, and Leo and Kane. In the meantime, have a nice relaxing lunch, rest up, and hopefully we'll see you this afternoon. Thanks for coming.